Open, everyone. A minute to go until the start of cash equity trading. I'm Francine Lacroix in London with Tom McKenzie.
And these are your headlines. Downshift gains momentum. The Fed's Mary Daly warns about the lag effects of rate hikes, while Loretta Mester says 75 basis points is not needed next month. FTX fallout. Crypto firm Genesis warns of bankruptcy as it struggles to raise cash. US prosecutors, well, they began probing Sam Bankman-Fried's empire months before its collapse. Plus, keeping the lid on oil whipsaws as Saudi Arabia denies a report saying OPEC Plus is weighing a production increase at its December meeting.
All eyes on oil, all eyes also on the markets. So we're a couple of seconds away from the open, and it's very clear that markets, Tom, are quite mixed. You can see the FTSE 100 gaining some 0.2% in futures. DAX futures actually down. So we look at Fed speakers, and of course we look at COVID in China.
We do indeed. A fifth of that economy now facing COVID restrictions. I would argue there's a bit of lack of momentum given that mix then for these markets. You're currently seeing just very modest losses on the Spanish IBEX. Now that's turned to gains of 0.2% over in Spain. Similar picture here in the UK, the FTSE 100 up 0.3%. We continue, of course, to monitor the language out of the Prime Minister Rishi Sunak, Lizzie Burden on the ground at the CBI around potential easing of the relationship between Brussels and London. Some pushback there from the right wing of the Conservative Party. Currently, you're seeing gains of 0.4%. JP Morgan's Kalanovic says, in terms of this broader market sentiment, you're actually going to need to see a cut before risk assets really rally significantly. We'll switch it over and see how things are looking futures stateside then after modest losses yesterday. And yes, the Fed officials coming out saying, look, we still expect hiking that has to come through and a terminal rate above 5%, but we could start to moderate, and certainly the market's pricing in around 50 basis points for December. Future stateside, currently range-bound, euro-dollar, just supported upside on the back of softer dollar today. You saw some gains for the US dollar yesterday, a little softer day, off for about 0.2%, reflected in the single currency, currently gaining 0.2 on euro-dollar, 102. The 2-year, you've seen yields down on the 2-year, across the range actually, across the Treasury curve, 450 is most pronounced on the front end, 450 on your 2-year. That inversion though, 2's10, still pronounced about 70 basis points. Brent, $88 a barrel, a gain there of 1%. As Francine said, real fascination around what's happening in the oil markets. The reporting from the Wall Street Journal around a potential increase to output, then the Saudis coming out very strongly saying, no, not so fast. In fact, we're going to give ourselves optionality as to whether or not we even consider a cut. China, absolutely a factor there. Francine.
Tom, this is a picture for the sectors that are on the move the most. So out of the 23 sectors, I think about half are actually gaining and half are losing. So again, it goes back to the idea that it's really a mixed bag. If you're a growth stock, you're probably not doing too badly in today's trading session. Utility, banks, basic resources are actually some of the biggest gainers. You have real estate, technology, auto parts and construction on the down. And then the rest is really, some of them coming out with an outlook that's maybe more concerning than others. I know there's a lot of pressure on industrials, and this is also because they have to pay for raw material costs that could go higher, including the price of oil, Tom.
Yeah, and the turmoil in the crypto markets also is drawing our attention. Hourly, daily, certainly turmoil within the crypto space. This time, the focus is on the brokerage firm Genesis. It's warning it may need to file for bankruptcy. That is amid contagion from the rapid demise of FTX, which has contributed to reduced liquidity in the crypto markets. The saga is spooking investors. Bitcoin trading around the lowest level since November 2020, currently at 15,734. Joining us now is Ana Herrera, Bloomberg's senior crypto editor. Ana, fantastic to get you on to walk us through the developments we've seen just in the last 24 hours. So it's now Genesis where the scrutiny is. Is this company on the brink now?
Yeah, so we've heard that they're trying to raise $1 billion. Obviously, they were ensnarled in FTX. They had 175 million, they said, locked up with FTX. And they're one of the biggest lenders and also one of the biggest brokerages. And obviously, if they go down, if they're not able to raise, that could have very dire consequences for the rest of the market because they're everybody's counterparty. So we'll see essentially the FTX saga, but even what began this summer and spring with Terra Luna sort of spreading onto the crypto markets. And obviously today we're seeing it's affecting prices as well.
So Anna, when do we know when the last, as it were, like TikTok has fallen? So how long does it take for us to work through the second round effects of some of these potential fallouts?
It's very hard to say because we're seeing, even with FTX, we saw the new CEO say that they weren't really keeping track of things very, very well. So there's also a sense that some of these firms might not even know themselves who they're exposed to. And we feel that we get a sense from the market that everybody's in wait and see mode. People aren't investing as much as before. Everybody's holding off and they're seeing if their other counterparties are exposed. So it might take a while, actually, still.
Yeah, there's still questions about the due diligence or lack of due diligence. Some reporting from the Bloomberg team around Bain and their role to kind of check and stress test some of the investments for Tiger Global. But we are hearing and we are reporting that regulators in the US had started to look at FTX months before the bankruptcy. So maybe the regulators were onto something when maybe possibly the due diligence teams were not.
I think they were looking mainly at the AML and KYC, so the anti-money laundering and know your customer practices, because obviously that's been a big sore point in crypto for a while. Some of these firms are quite young and quite new, and their, I guess, compliance units aren't as strong and big as those of banks. And so there have been issues with, having people on the platforms that weren't supposed to be. So I think that's what the authorities in the US were looking at in the story you referenced. But obviously, we've talked about due diligence. One of the biggest questions people have is like, how did no one notice what was going on at FTX? They raised lots of money for very big firms and, professional investors, even a pension fund. So the big question is, why didn't anybody see, the numbers didn't add up? And I guess the point is there was so much FOMO at the height of the market, so fear of missing out, and everybody was jumping, and maybe they weren't thinking about it too quickly. They just thought, if I don't invest in it now, it'll be a missed opportunity.
But Anna, what exactly are we looking at? So I know the FTX, bankruptcy filing shows a $1.2 billion cash balance. Is this? I mean, could we talk about a Ponzi scheme, or is this maybe a rival trying to call them out, or is it just really lack of regulation?
I don't know that we can talk about a Ponzi scheme now. The big question is really what happened, right? We know what happened in front, sort of the, I guess, on Twitter, what the exchanges between CEOs, but we really don't know if there was a hole that they tried to fill by, trading, or if. But I think Ponzi scheme might be too strong at the moment. I guess we need to figure out where the money went, right? That's what the creditors probably are really concerned about now.
Anna, thanks so much. Anna Herrera, there, Bloomberg senior crypto editor. Now, we're also talking to Patrick Armstrong, Chief Investment Officer at Plurimi Wealth. Patrick, we have many, many questions, of course, on equities and what you're seeing in inflation, but what's your take on crypto?
It's the lowest it's been since 2020, and I think it's the highest it's going to be for years to come. You asked about a Ponzi scheme with FTX. I think if you go back a few levels, the whole Bitcoin itself and the genesis of it, you can even characterize that as a Ponzi scheme to some extent. It's the main focus for crypto investors and speculators is the get rich quick. I don't think it solves a fundamental problem. I don't think it's a medium of exchange, so it's not a transactional currency. It has the claim to be a store of value, which is questionable. But the medium of exchange, I think there will be a crypto that fulfills that role, that basically displaces Bitcoin at some point. So that's not there right now. And the vast, overwhelming majority of participants in crypto are speculative investors who are just looking for a quick win.
Okay, Patrick Armstrong, there it is, definitive, not buying crypto at this point, despite the valuation drop that we've seen. Patrick, when we link this to, and this is linked to what's happening with central banks and the Fed and tightening, given what we've been hearing from officials just over the last few days, my question really is, what is most important for the equity markets? Is it the journey, or is it the ultimate destination when it comes to rates?
I think the Fed's going to be playing less importance in the direction of equity markets in the coming year. So I think it's probably been the most important driver of equity markets. Quantitative tightening, higher interest rates, higher real yields, all of that's coming from the Fed. The direction for equities in 2023 are going to come down from margins that companies are able to achieve and revenue growth if they're able to achieve that. And I think that's really going to be much more important than the Fed. The Fed's got another 100 basis points in hikes ahead of it, maybe 125. I don't think they'll do that because the economy slows. But after that, it's going to come down to company fundamentals and economic fundamentals rather than the Fed, because the Fed's pulled the carpet. 2023, it's going to come down to good companies that are winning and poor companies with poor business models probably being punished by the market.
But Patrick, is that just the companies that can deal with inflation versus the ones that can't? So we had a U.S. CPI ticking lower for October, but actually stuff may not be getting much cheaper in Europe anytime soon.
I do think inflation is going to be part of it. It's going to come down to companies that can defend their profit margins. So consensus estimates for 2023 are that the S&P 500 delivers a profit margin of 13%, which is a record high. I don't see that happening. With a consumer that's going to be strained by higher petrol prices, utility bills, mortgage rates, it's going to be very hard for companies to continue to pass higher prices on to consumers. They've done that very well in 2022, and they've just raised their prices and said, not our fault, higher input prices. I think it's going to be a little bit harder next year. And gravitating towards companies that have really defendable margins, I think, is going to be the winning strategy in 2022. And I think it's healthcare, luxury companies. I think you still want to own energy because that's going to be creating margin squeezes elsewhere. And agribusiness equities, I like those as well.
What is the case for energy, Patrick, within a recessionary environment? How can you justify getting more exposure to a sector that's already done very well year to date?
It's done very well year to date. The spot prices of oil has really sold off now. I'm down towards $80 on WTI, a little bit below yesterday. But the physical market's still very tight. You're seeing inventories drawn down every week on a DOE inventory level. So basically demand, it's not going to grow rapidly in a slowing economy, but it's going to continue to grow, and supply growth isn't there. No companies exploring and developing new oil production, so it's going to come down to OPEC, what they do. They're a swing factor, but basically the whole West, nobody's exploring and developing for new oil. So you're going to have demand slowing, but there's been no supply response on high prices.
Patrick, what's a sweet spot actually for, we know that OPEC Plus is not targeting a certain price of barrel, but they must, at the back of their mind, have a range of where they want it to be.
I think it's around $80, actually. I don't think they're going to want to increase production if we're below $80. I think anything above $80, they're very comfortable with. All oil and gas companies are very profitable at anything above $65 pretty much. And it's every day that oil's above $65, it's a windfall for energy companies. So for me, it's not explicit, but it's around $80 is where I think OPEC's got in mind.
Patrick, just briefly on fixed income, we're going to come back to some of your calls after the break, but our own, there's a lot of calls around, particularly investment grade US within fixed income. Are you being rewarded for the risk at that point and that level, or do you want to push out into higher yield? Is that looking attractive?
I like investment grade fixed income. I like short duration. You're not going to get rich from it, so it's the opposite of a speculator and a crypto investor we talked about. But you can get 6% yields for 2-year bank debt, all investment grade, BBB plus, A minus banks, and getting a 6% yield. It's not incredibly high return, but it's a high return with very low risk. So I'm really attracted to the front end, investment grade, picking up 6%. I think you're going to meet and beat inflation over the next couple of years with that, and pick up about 1.5% over the 2-year treasury.
Okay, there you have it. A couple of important calls there from Patrick Armstrong on energy and investment grade at the short end. Patrick Armstrong, CI at Plurimi Wealth. Going to stay with us. We'll get more calls on what Patrick is shorting and what he's owning within this environment in the next few minutes. Coming up, Fed officials have broadly maintained their steadfast stance in the fight against inflation, but JP Morgan's Klanovic sees more downside risks until the Fed stops hiking from bull to bear. We're going to discuss that next. This is Bloomberg.
After hardly a full year of name, image, and likeness deals being a reality, UCLA quarterback Chase Griffin already has more than 20 deals with major brands, venture, and charitable groups, all while balancing graduating undergrad in just 2 years and fighting for playing time on the field.
Chase Griffin out of the gun.
We are joined by UCLA quarterback Chase Griffin, not just UCLA quarterback, but name, image, likeness superstar. I am psyched for this one.
This kid could actually be the president of the United States someday.
When it comes to building generational wealth, it's not about the money that you make in college. I'm very excited that I made the amount of money that I made last year. I am even 10 times more excited that I know how to make that money.
No one covers the world like Bloomberg.
My team thinks 2023, we avoid a recession. I'm a little more skeptical about that.
China and the U.S. both do not want to see nuclear force on the European continent.
The regulators here in the Bahamas are ongoing with their investigation into FTX.
With unmatched reach and resources from more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, your global business authority.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
As we work to bring policy to what we call a sufficiently restrictive stance, which really in simple terms means the level required to bring inflation down and restore price stability, we will need to be mindful. Adjusting too little will leave inflation too high, and adjusting too much could lead to an unnecessarily painful downturn.
Well, that was San Francisco Fed President Mary Daly speaking about the potential impact of Fed policy. Now, her Cleveland counterpart, Loretta Mester, said she's open to slowing the pace of rate hikes, and JP Morgan's Klanovich says the Fed will have to start reducing interest rates for there to be a sustained rally in risky assets, but that's not likely to be in the near term. Now, we're back with Patrick Armstrong, Chief Investment Officer at Plurimi Wealth. Patrick, we're talking a little bit before about the Fed and actually the fact that going forward, you think it has a bit less impact on some of the equities. Where do you find the better returns right now in the equity space?
Luxury is the easy one for me right now, that it's a sector that has incredible profit margins, very defendable profit margins. Higher input prices don't matter at all to luxury companies. Their consumers, high-end affluent consumers, aren't having their purse strings pulled by utility bills and mortgage costs. So that's a sector that's slightly expensive, but I think it's worth it given the returns on equities and the very defendable profit margins. So LVMH, Montclair, Hermes, I think those companies are very well positioned. They've got a tailwind of the weak euro basically supporting dollar revenues as well.
My concern about luxury, Patrick, is if Francine Lacqua stops buying, there's going to be a hole here in terms of that demand. Forget about China. Have you been holding back?
Input model, yeah, just making sure.
Yeah, it is. the Aqua model.
Patrick, okay, that's a luxury call. You got Montclair down 24% year to date, LVMH down 4%, but of course you compare that to what's happening with some of your short positions, H&M next, Adidas. What is Adidas down 50%? So is there still further to go on some of those lower end retailers? Are you holding that short position?
I do think. Yeah, I'm still short both of those stocks. I think mass retail are going to have a lot more difficulty passing on prices to consumers next year. So they've done it reasonably well. Stocks have still been hit this year. Profit margins are going to be squeezed. And you may even see some revenue disappointments next year if the economies do really start to roll over and start to see higher unemployment, which is obviously going to impact consumer spending. So definitely think it's a great pair trade right now, going long luxury, short mass retail.
Is there anything in real estate? Patrick, I know, we're on the cusp of a housing crisis in many countries, including Sweden, where we haven't really seen anything like that before. Does it also create opportunities?
I'm short real estate. Higher interest rates basically destroy the asset values. Higher interest rates destroy the valuations of equities, bonds, and property. So I do think there's further headwinds for property prices. The cap rates are going up with interest rates, and it's hard to pass on higher interest rates in terms of higher rents in commercial property. If you're renting out office space, work from home has taken a hold. It's not to the same extent it was last year, but there's more flexible workforces, more people working from home, and vacancies. It's hard to fill them right now. So I think it's a pretty toxic environment for commercial property.
Patrick, what's the resilience of healthcare post-pandemic, and which healthcare providers, which drug makers are kind of best positioned in this new reality?
Yeah, I think in a slowing economy, I'm always attracted to healthcare. Very defendable revenues, profit margins, lots of cash flow. Novo Nordisk is my preferred play, and I think it was the pandemic. COVID was the disease that was driving revenue growth in recent years, but I think it's obesity and diabetes, the Western world, in particular the United States. That's the new area of focus and growth, and Novo Nordisk has a suite on diabetes and obesity that no other firm matches. So that's my preferred play. I like Roche. It's a big biotech company as well as a pharmaceutical. It's got a pretty strong pipeline, and its oncology drugs, I think, are really going to drive strong cash flow growth for them as well.
Patrick, did you load up on Disney yesterday?
I haven't. I can see why you would. I think it's got incredible assets. I don't own any Disney right now, but I think if you want to buy and hold it for the next decade, I think it would make good sense. I think owning content rather than distributing content is where you're going to make much higher earnings and cash flow, and I think that's where Disney beats everyone else. They've also able to monetize the movies and content they create through theme parks and music the way other companies can't.
All right, Patrick, we have a viewer question. You were talking about luxury, the importance of the yuan, the importance of a strong yuan in terms of that EU luxury call.
I don't think it's that important. The Chinese mass market is suffering more than the highest end consumer in China, and the highest end consumer in China, it matters, but it matters at the margin. They all have dollar assets and spending abroad as well as in Hong Kong. But it matters, but I don't think it changes the trajectory of many companies.
Okay, Patrick Armstrong, always excellent with the calls, CIO at Plurimi Wealth, on the opportunities around luxury, around healthcare, and on the back of Francine's question, Disney as well. Maybe something to look at on the back of the renewed position there for the CEO comeback. Right, come up, we are back at the CBI conference in Birmingham. We're going to speak to the president of the UK's biggest business lobby. That's just after 8:30 a.m. UK time. This is Bloomberg.
When I started, I had no idea it was going to turn into this, which is a tracksuit empire. I don't have any investors. All this is all money in. This is me going out and hustling, bringing that money back, and just building it. You gotta think about a person that was homeless at one point, didn't really have any money coming in. The fact that this person was relentless and just determined to succeed and not let rock bottom define him as an individual. I can take things and put them together and take them apart and make them better and put them back together. I respect the craft, so I don't want to minimize and disrespect the value of each step of the craft and do by machine what should be done by hand.
A lot's happening on Wall Street.
I'm quite encouraged. The center is holding.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
A lot of these areas still have very, very good valuations.
From businesses most influential and instrumental.
It's knocking it out of the ballpark.
Now's not a great time to be speculative. It's time for a pivot.
We're talking about a significant hit to our standard of living.
Bloomberg Wall Street Week, live Friday with replays all weekend on Bloomberg Television and Radio.
We're in the early stages of a sustainability revolution that has the magnitude of the industrial revolution coupled with the speed of the digital revolution.
Nobody covers climate change like Bloomberg, your global business authority.
Welcome back to the Open, everyone. 23 minutes into the European trading day. Overall, stocks a little bit mixed. Traders, of course, weighing what the Fed does. We have, I think, about 3 Fed speakers today to give us any insight into what they're expecting inflation to do and, of course, the future path of interest rate hikes. And then we look at China lockdown. The DAX down 0.2%. Now let's get straight to the Bloomberg Business Flash. Here's Alice Atkins. Hi, Alice.
Hi, Francine. SocGen and AllianceBernstein have agreed on a partnership that merges large parts of their equities trading businesses. The joint venture will be run out of London under the name Bernstein and will unite the cash equities and equities research units of the two firms. The French bank will hold 51% of the new business. Elon Musk has laid off more Twitter workers from the sales side of the business, further trimming its staff already diminished by cuts and resignations. Last week, the billionaire asked workers to commit to his more hardcore version of the company or leave the business. Almost 5,000 staff have quit or been fired since Musk's takeover. Enel is to sell off assets worth 21 billion euros to cut debt. Italy's biggest power company has maintained its adjusted net income target for next year at between 6.1 and 6.3 billion euros. The company had already reduced its guidance for this year, citing the effects of the energy crisis in Europe. Enel's debt hit a record of almost 70 billion euros at the end of September. Disney will pay Bob Iger about $27 million a year for returning as chief executive officer under a new 2-year deal. Iger is to get a $1 million base salary, a similar-sized bonus, plus stock awards with a yearly target value of $25 million. Shares surged on news of Iger's return to the helm of the world's largest entertainment company. That's your Bloomberg Business Flash. Tom, Francine.
Alice, thanks so much. Alice Atkins in London. Now, the movers, it's actually more of a quiet day than yesterday.
Yeah, there's not a lot of pricing action, but there are nonetheless some interesting corporate stories to tease out beyond the pay packet of Bob Iger, 27 million per year. Not too bad, is it? Enel is an energy company in focus for us, of course, the Italian energy company. This story is about asset disposals, about moving and repositioning the business. They want to cut their debt load, so they're looking to sell assets worth about 21 billion euros. The stock currently gaining close to 2% on the back of that news. SocGen, we've just discussed that. Alice Atkins just broke down what's happening there with AllianceBernstein joining a JV around their equities business, currently down 1% on the back of that news. Volkswagen downgrading, according to reports at least from the Handelsblatt, downgrading their views in terms of sales in China, reducing their 2022 car sales target to 3.3 million cars from 3.85 million. The stock down 0.4%. Francine.
Now, coming up, Saudi Arabia denies a report that it's discussing an oil production increase. Well, we'll talk oil, we'll talk prices, demand and supply. That's coming up next, and this is Bloomberg.
When the price of anything goes up, the consequences reach far beyond what you'd expect. But perhaps most of all, when it comes to food. In 2010, surging food prices helped spark the Arab Spring. Lives were lost, regimes fell, and the consequences are still with us. Once again, food prices are rising, and fast. Energy costs, broken supply chains, and surging demand were just some of the factors that have driven food prices to their first record high since the Arab Spring. And that's all before a war between two of the world's biggest food producers. Ukraine is called the breadbasket of Europe, and taken with Russia, the two account for about a quarter of global wheat trade. They produce more than half of the world's sunflower seeds and oil, nearly 20% of the barley. Now throw in rising energy prices, and processing, transporting, even refrigerating food gets more expensive. Plus, fertilizer production is extremely energy intensive. Less fertilizer means lower crop yield, and prices rise even more. The pandemic revealed how complicated and fragile global trade systems are. Global agriculture, perhaps even more so. Unlike metals, for example, food goes bad. And crops take months to grow and are vulnerable to unpredictabilities like the weather. Rising food prices will be felt everywhere, but the poorest countries in the world will be hit the hardest. And as all these factors compound, the real fear is that record high will lead to record high, and ultimately to a global food crisis with vast consequence.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
Welcome back to the Open, everyone. 30 minutes into the European trading day, and here are your top stories. Downshift gains momentum. The Fed's Mary Daly warns about the lag effects of rate hikes, while Loretta Mester says 75 basis points isn't needed next month. FTX fallout. Crypto firm Genesis warns of bankruptcy as it struggles to raise cash. U.S. prosecutors began probing Sam Bankman-Fried's empire months before its collapse. Plus, keeping the lid on oil whipsaws as Saudi Arabia denies a report saying OPEC Plus is weighing a production increase at its December meeting. Tom, if you look at the markets, Fed, China, oil also dominating them all.
Yeah, and you see that reflected in the FTSE 100. Some of the top gainers for the FTSE 100. And in fact, the last time I checked, the three top gainers are all energy companies on the back of that OPEC Plus story. We're going to break that down for you in more detail. And the pushback from that Wall Street Journal reporting that maybe they were looking at an increase. The pushback came pretty swift from the Saudis. Across the benchmark, you're seeing gains of 0.2%. So for the moment, wiping out the losses, the modest losses we saw yesterday. The DAX is range-bound now. Not a lot of movement on the German index, 14,380. You got Volkswagen there warning, according to reporting from the Handelsblatt, that maybe their sales in China will be meeting the targets they previously set. We know about a fifth of that economy facing COVID controls at this point. The FTSE 100, as I mentioned, gaining 0.7%, up 51 points, 7,428. Energy, a big factor there. Let's switch it over then and see how the sectors are playing out for you this morning. Oil, the last time I checked, Brent above, WTI above $80 a barrel, Brent up around 1.5%. And it is energy, top of the list, 3.4%. Tie that into the OPEC Plus story. Basic resources gaining as well, making up for some of the pressure that we saw yesterday on the back of China demand concerns, currently up around 2%. But that has been a volatile sector in the red. A number of sectors, real estate at the bottom of the list, now 0.6%. But it is the oil story that's dominating on the sector-by-sector basis and certainly propping up the FTSE 100. Francine.
Oil, steady, pretty much steady, following a conflicting report of possible OPEC output increases as traders continue to weigh the demand picture in China. Well, joining us now to discuss all of this is Bloomberg's Paul Wallace, who leads our coverage of Middle Eastern energy and commodities. Paul, good morning. So talk us through some of the twists and turns in the oil market at the moment.
Hi, Francine. Well, yes, oil was really whipsawed around midday London time yesterday when there was a report from the Wall Street Journal that OPEC was thinking of raising production at next month's meeting and possibly by as much as 500,000 barrels a day. Roughly an hour or two later, the Saudis came out with a denial of that story, a very unambiguous and strongly worded denial, which they don't often do, even with stories that they don't like. They said that if anything, they were going to cut production even further if they needed to. So oil sort of erased all its losses after that, and it's up again today. And in some senses, the Saudis have sort of set the scene for the December 4th OPEC Plus meeting, and it looks, at least if yesterday's statement from the Saudis was anything to go by, that the group will either stay steady with output or reduce it. But it seems unlikely, you'd have to say, that it will end up raising production.
Okay, Paul Wallace, thank you. On that OPEC Plus story, then the Saudis coming out again, pushing back against that Wall Street Journal story. You're seeing gains for Brent WTI on the back of that. Let's stay with the energy story and the implications for Central and Eastern Europe and beyond. With us to discuss the wider economic picture is Kevin Daly, co-head of CEEMEA. We need a pithier acronym. Economics at Goldman Sachs. Kevin, good morning. Thank you for joining us. So I do want to start with Central and Eastern Europe. I know your jurisdiction spreads beyond that, but within Central and Eastern Europe, with the component that is Ukraine and the Russian war, what is the resilience for those countries and those jurisdictions to this energy shock? We see the stockpiles in Germany, not part of the mix, of course, in terms of your region, but in terms of Central and Eastern Europe, is there a resilience there to these energy shocks?
I mean, so far there has been. I mean, we've been surprised, and I think other forecasters have been surprised this year. We, in the aftermath of Russia's invasion of Ukraine, we cut our forecast pretty dramatically for the CE countries. But, through the course of this year, the activity has remained relatively robust. And so we've been, in response to the strength of that activity, we've actually revised higher our forecast for those economies. Now, that said, I think there is, a little over 6 months on from the start of the conflict, there is signs that a slowdown is now underway. We think, given tighter global financial conditions, the lagged effects of that globally and within the region, but also the squeeze on household incomes from energy prices, we think those two factors combined will contribute to an ongoing slowdown in growth. So the slowdown is now underway. It has been resilient to date, but we think we're slowing it to 2023.
Kevin, who suffers the most and good morning, who suffers the most from higher dollar?
In terms of, within the CE region, it's very, from an asset market perspective, actually, CE is much more closely linked to the euro, so it's less relevant for them. We do, as a house, we think dollar strength will be maintained over the next 6 months or so. There's two conditions our strategists are looking for to call an end to dollar strength. One is clear pivot from the Fed. A second would be a trough in activity outside of the US, a trough in global activity. Until at least one of those conditions are met, we think dollar strength will be maintained. And we see little signs of that. So although clearly the dollar weakened after US CPI data, we view that as an opportunity to put on more dollar longs.
Kevin, a terminal rate of 8%, as we stress and hand wring over 5% in the US, a terminal rate of 8% is your view within Poland, the Czech Republic and Romania. What does that do to growth in those countries?
We're at a very interesting juncture at the moment, because obviously, I mentioned briefly the US CPI data. That was weaker than expected, has led to expectations globally that we may be past the worst of the inflationary peak. I think it's important to point out that, across the world, actually, there was a significantly more upside surprises to inflation in the October data than there was downside surprises. So the US was somewhat of an outlier. And certainly in this time zone, so across Europe, including the CE economies, inflation continues to surprise to the upside. And what's worrying about that is that it's no longer being driven by energy prices, because they're now turned over and there are base effects in that component. It is much more broad-based. It does appear consistent with a destabilization, a de-anchoring of inflation expectations. And so central banks, in our view, are going to, their work is not yet done in the CE region. So we think they will have to tighten more. We think they'll need to raise, leave rates higher for longer than the market is currently pricing. And I think that will be damaging for growth next year. And that's one of the reasons why we think that, although these economies remain resilient to date, they're going to slow quite sharply into 23.
Kevin, is Turkey still investable?
Actually, Turkey's an interesting because it's clearly their monetary policy mix is entirely unsustainable from a medium to long term perspective. We together with consensus expect them to cut rates. I mean, despite inflation being 85%, we expect them to cut rates another 150 basis points to 9%. So that is clearly the wrong monetary policy to have. But it's also the interest rate is no longer as relevant as it was. They're leading a quantitatively driven monetary policy. They're benefiting from a significant influx of inflows in errors and emissions. So undeclared inflows into the Turkish economy, which has made, at least in the short term, we think this side of the elections next year, more sustainable. So, one needs to be very careful where one invests in Turkey. But actually from, the currency perspective, actually we think in the short term there is some sustainability to the current environment because of these big inflows that they're benefiting from. So the currency, clearly it is a very risky prospect, but on the currency side, we think it will do better than the forwards over the course of the next 6 months or so.
Okay, Kevin, thank you so much, as always, for joining us. Kevin Daly there, a co-head of CE MEA Economics at Goldman Sachs. Now, coming up, we're back at the CBI conference in Birmingham. We'll be speaking to the president of the UK's biggest business lobby. We'll ask him, of course, about inflation and the cost of living. This is Bloomberg.
COVID has changed everything. People are changing the way they work and the way they travel. Can you explain what you mean?
I think the world is never going back to the way it was fully before the pandemic. And one of the changes, I think, David, has been a change in how we work. Many people had a job at an office. They're not going to be required to come back to the office 5 days a week. And I don't think CEOs per se are going to determine these policies. I think workers will, because all of us CEOs, I think, want the best talent. And I think flexibility is going to be the second most important benefit after compensation. All of this, David, has culminated in Airbnb not just being a company about traveling, but now a company about living. So there's this whole new category of travel that's not classic 2-3 nights in a city. It's not long-term housing, and it's completely emerged because of the pandemic.
Enjoy the excitement of a night of music at Boston Symphony Hall with BSO Now. Watch brand new Boston Symphony Orchestra performances, behind-the-scenes storytelling, and memorable archival concerts, all from the comfort of home. Use our free 24-hour trial and see why the Boston Globe calls it musically rewarding. And the Berkshire Edge says the orchestra has never played better. Visit bso.org/now, where the music plays on. BSO season sponsored by Bank of America.
Strong enough to stay. We will never.
Welcome back to the Open, everyone. 42 minutes into the European trading day. We're seeing a bit of acceleration. Certainly the European stocks now unchanged, but actually it's still a mixed bag depending on some of the equities and their prospect going forward. It's really mixed. If you look at the sectors, Tom, half of them are up and half of them are down.
Yeah, the FTSE 100 a bit of a standout at this point, gaining 0.6% on the back of that energy story then. Brent WTI up and the energy producers gaining today. Talking of the UK, Prime Minister Rishi Sunak addressed a meeting of the UK's biggest employers yesterday, doubling down on his Brexiteer credentials. Bloomberg's Lizzie Burden joining us from the conference with a guest. Lizzie.
Thank you, Tom. I'm here with our host at the CBI's annual conference. It's Brian McBride, president of the CBI. Thank you, Brian, for having us and for joining me. We're going to hear from the opposition leader, Keir Starmer, today. We're expecting him to tell us that the UK is over-reliant on immigration. He wants to end cheap labour. Why will he succeed when successive Conservative prime ministers have failed in that mission?
Well, I think we need to start with the data. What we know today is that there's 1.3 million jobs unfilled in the UK. Last quarter, 52,000 more people left the working register. So we've got a problem that's not fixing itself. Migration is one of the answers to it. It's not the only answer. It's not the perfect answer. You know, long-term reskilling, retraining is part of it as well. But in the short term, we need to bring in people to do the jobs that aren't being filled today. And it's not just smart jobs. It's not just data and data scientists. It's baggage handlers, it's butchers, it's hospitality workers, it's healthcare workers. We've got a chronic problem today, and the government and the opposition need to face up to that.
But the businesses that you represent are facing higher costs across the board. How will they be able to pay higher wages?
Well, I think what we're missing today with having unfilled jobs is a big hit to our productivity. They're missing out on revenue, they're missing out on profit. So in fact, these will be self-funding. Bringing in people to do the jobs that aren't being done will drive revenue, will drive the economy, and they will pay for themselves.
And Brexit seems to have somewhat derailed this conference, or at least overtaken the messaging. Rishi Sunak has said that the UK won't align with the EU's laws. But given the massive challenges facing the UK economy, is it time that he stood up to the hardline Brexiters in his party?
Well, look, I think it's right that we're not going to knuckle under to the EU laws. That's one of the reasons why we came out. But we have to work much more closely with the EU. The trade agreement is hardly enacted at the moment. The Northern Ireland Protocol is holding the whole thing up. We're missing out on trade with the EU. We're missing out on possible trade deals with the USA because of the Northern Ireland Protocol, because of politics getting in the way of business.
And why is it that businesses aren't investing in Britain? Is it because of the political instability? What should the government do to encourage that investment?
Yeah, I think it's a nervousness. It's not so much about the political instability, although that doesn't help. But I think people are just wary about heading into this recession. We're going to have a very tough 12 to 15 months, and people are just not sure, is this the right time to place their bets? The government can make this a lot easier by using some non-cash measures, by making planning a lot better, by taking out some of the regulation, by helping with migration, as we talked about, and by facilitating much better trade with the EU. These four things would not cost the government anything, and it would improve the growth prospects of our country.
And Labour says that it would be more balanced in its focus between fighting inflation and boosting growth. But it's easy to say that when you're in opposition.
Yes.
Are your members convinced that actually Labour can afford its plans to boost growth?
I think if Labour got into power, it wouldn't have that many different options fiscally than what we're seeing today. What we did see from the Conservatives, from the statement last week from the Prime Minister, is that they've certainly created the foundation for stability. That was an important prerequisite. But we now need to see growth. Stability is great. It's a prerequisite for growth. But growth is what's going to drive the economy. Without growth, there's no business success, there's no profits, there's no taxes, and it's taxes that are going to pay for the schools, the hospitals, and the public services that this country needs.
You talked about closer ties with the EU. We're seeing the polls on Brexit changing. Will those encourage businesses to be more frank about their experience of the impact of Brexit?
I think businesses look ahead and don't look back. I think Brexit's done. It doesn't matter how you voted. Brexit's over. We've come out. And so now it's about optimising what we've got. We have got a trade deal with the EU. We're a member of that customs union, and we have to actually leverage it and get much more out of it than we are today, because the politics of the Northern Ireland Protocol are getting in the way day in, day out.
Brian McBride, President of the CBI, thank you very much for joining me. And Brian's going to be speaking to the conference shortly. He'll be followed by Keir Starmer. And after that, Tom Francine will see who's the party of business.
Yeah, Yeah, we will. Lizzie, thanks so much. Great work on the ground there at the CBI conference in Birmingham. Now, let's get straight to the Bloomberg First Word News with Alice Atkins. Hi, Alice.
Hi, Francine. COVID restrictions now weigh on a fifth of China's economy as infections continue to rise, undermining Beijing's call for more targeted COVID zero measures. More than 27,000 new cases were reported on Monday, near a record, with the southern manufacturing hub of Guangzhou the current epicenter. Many local authorities have been expanding testing and shutting schools and offices despite recent directives to ease measures. Malaysia's king has summoned political leaders for an audience at the palace later today. Lawmakers from key bloc Barisan Nasional earlier informed the monarch that they don't support ex-premier Muhyiddin Yassin as Malaysia's next leader. The country's politics were thrown into disarray after the weekend snap polls led to a hung parliament. Indonesian officials fear the number of people killed by a powerful earthquake may rise as they search the rubble of homes and buildings. Reports suggest at least 162 lives have been lost, with hundreds more injured after the magnitude 5.6 quake shook the West Java region on Monday afternoon. Tremors were felt in nearby cities, including the capital Jakarta, where office workers fled buildings. A group of European football teams have decided against wearing rainbow armbands at the World Cup after threats from FIFA. The sport's governing body suggested players could get a yellow card if they wore the One Love armbands in support of gay rights. England captain Harry Kane instead wore a FIFA-approved armband saying no discrimination. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Tom, Francine.
Alice Atkins, thank you. Coming up, chaos at Twitter leads Tesla into a tailspin. More on the world's richest man and his companies next. The impact on that car company, Tesla as well, of course, under pressure with its stock. We'll bring you that story. This is Bloomberg.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia. This is Countdown to the Close. Welcome to Bloomberg Crypto.
Welcome back to the Open, everyone. 52 minutes into the European trading day. We await Fed speakers, and you can see equities actually a little bit of divergence. Mixed stock markets across the world. We look at oil, and of course we look at China as well. Now, signs that China's increasing COVID-0 curbs rather than moving away from them is adding to this litany of investor worries over Tesla. The electric vehicle maker's stock dropped to the lowest since November 2020. That was yesterday. Now, investor anxiety was higher after a city near Beijing actually returned to lockdowns, putting both production and sales at risk. Tesla also initiated a recall of more than 300,000 cars due to faulty taillights.
Yeah, and elsewhere for Musk, he has laid off more Twitter workers, yes, more from the sales side of the business, further trimming a headcount already diminished, of course, by cuts and a slew of resignations. Let's bring in Matt Bloxham then from Bloomberg Intelligence with what is happening around the Twitter story in particular and how the Tesla impact is kind of overflowing. And please, raising questions about the attention of Elon Musk. Let's back up a bit and get us up to speed on what is happening with Twitter in terms of these resignations. Does he have the staff to drive things forward? There's been concern. There was concern on Friday that it may not even live through the weekend. It clearly has.
Yeah.
Was that over-exaggerated? Where is the company now?
Yeah, I mean, it's a big question. Obviously, it was a big weekend for them. They cut 50% of the staff last week. I think there were more resignations over the weekend and more terminations on Sunday in the sales area as he tries to balance out the organisation. Yeah, it's a bit of a black hole right now, what's going on in Twitter. As you say, the service still seems to be functioning. I think, when you see such a rapid drop in, particularly engineering staff, there's bound to be questions about whether you can keep continuing a service. I think it's going to play out in drips really over the few weeks. We might see a few days where there are problems with the platform and that they scramble to kind of get things fixed. I think, but ultimately Elon Musk has to be playing the long game here with the platform, given how much money he's spent on it. I think inevitably there's going to be a short-term dip on advertising revenue. We've heard lots of clients pull away from the platform. There's a question whether he can kind of stabilize the platform and rebuild it on a kind of 2 to 3 year view, I think.
But Matt, do we understand what the long-term view is? I mean, there was talk at some point, and we had heard also from some of the anchor investors that the idea is to do some kind of Alipay for it.
Yeah, I think we're going to see Twitter's platform evolve in a number of different directions. So right now it's 90% funded by advertising revenue. I think Elon Musk has said publicly that he wants to get to about 50% of the revenues coming from subscription type services. So I think there's going to be a big diversification in the way Twitter works. Exactly how that manifests itself as a user in terms of the kind of services you're offered is still incredibly unclear. And there was obviously this kind of monthly charge for the blue verification tick, which is now put on hold again, and there may be a different colour for corporations versus individuals. So I think he typical Elon Musk style. He's kind of running things on the fly, but he's involving everybody in those decisions he's making.
Yeah, and it's so granular, it's so grassroots. I mean, he was always a prolific tweeter himself, but it's just gone into overdrive. And since he bought the platform, he's interacting with staff that he's fired. He's interacting even with CBS. They pulled their advertising, then they suggested they might come back. In terms of the attention deficit for his broader portfolio of companies, this has to be a concern.
Yeah, I think it is. And I think actually even at one of our own events last week or the week before in Singapore, he was kind of flagging that his kind of time to sort out Twitter was coming to an end and his attention would be going back towards those other companies, SpaceX and Tesla. So I think we'll probably see the balance of what he's doing shift. I think when you see what's happened in the last couple of weeks, probably he kind of feels like, well, I've got my kind of plan in place now. I've taken a huge amount of headcount cost out of the business. I've set the ship in a new direction. I can now kind of turn my attention back to my other companies.
Okay, thank you. Matt Bloxham from Bloomberg Intelligence on the Twitter story for us and the linkages to Tesla, of course, with Elon Musk. That is it for the European market open. You're seeing gains of 0.2%. Futures in the US, though, pointing lower between about 1/10 and 0.3%. Surveillance Early Edition is up next. Francine will be here. Stay with us. This is Bloomberg.
China's appetite for energy is enormous. The country consumes about a quarter of the world's energy supply, 35% more than the US annually. Its energy needs have more than tripled since the year 2000. That consumption has helped to fuel astonishing growth, but it's come at a cost.
China is the world's largest greenhouse gas emitter. There is no way to tackle climate change unless China reduces its emissions to net zero.
The country's reliance on fossil fuels is also a hindrance to its own growth and the well-being of its citizens.
China is not energy secure. It has a massive import bill for things like oil and gas. It has a long-standing pollution problem, and it is also prone to outages that severely hamper industry.
All this has led the world's biggest polluter to take steps towards a radical transformation.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
We're in the early stages of a sustainability revolution that has the magnitude of the Industrial Revolution coupled with the speed of the digital revolution.
Nobody covers climate change like Bloomberg, your global business authority. Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question. Great question. Best question I get all night.
Bloomberg, top experts, great questions. This is Bloomberg Surveillance, Early Edition, with Francine Lacqua.
Good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London, and here's what's coming up on today's program. Downshift gains momentum. The Fed's Mary Daly warns about the lag effects of rate hikes, while Loretta Mester says 75 basis points is not needed next month. FTX fallout. Crypto firm Genesis warns of bankruptcy as it struggles to raise cash. U.S. prosecutors began probing Sam Bankman-Fried's empire months before its collapse. Plus, keeping the lid on oil whipsaws as Saudi Arabia denies the report, saying OPEC Plus is weighing a production increase at its December meeting. Now, we have plenty of stories to get our teeth into, but first thing is first, let's check on the markets. The market's a little bit, if not subdued, certainly mixed. When you look at European stocks overall, the 600 index is gaining some 0.2%. But for example, the FTSE is not doing the same thing as the CAC 40. We'll get onto the European map in a second. Technology under pressure, down 0.8%. The picture not only is what happens in China, but many questions as we have about 3 to 4 Fed speakers later on that could give us a clue on the path of interest rate hikes. And of course, the other story is oil. Bitcoin also will have a full roundup of exactly what's happening with that Genesis going bankrupt, 15,703. What does it mean for the viability of cryptocurrencies in general for the future? All right, we talk about mixed stocks, so let's look at the difference, for example, between the FTSE 100, where you see a 0.7% gain compared to the DAX, 0.2% higher, but actually it was a lot more mixed just 15, 20 minutes ago, where you had some of the indices, including the DAX, on the downside. Now, a bit of a lift, so we're definitely onto today's highs. The FTSE MIB in Italy gaining 0.3%. So fresh turmoil in the world of crypto. Brokerage firm Genesis warning it may need to file for bankruptcy. That's amid contagion from the rapid demise of FTX, which has contributed to reduced liquidity in crypto markets. Now, the saga spooking investors with Bitcoin trading around the lowest level since November 2020. Well, joining us now is Anna Herrera, Bloomberg's senior crypto editor. Anna, what exactly is going on? How many more companies could go under because of FTX?
We don't really know, and that's what's spooking investors, I guess, is that people didn't really think that this could happen to FTX. So someone told me last week, if you can't trust FTX, who can you trust? And now we're seeing something happening with Genesis. They're trying to raise, and they've warned their potential investors that if they don't raise, they might have to file for bankruptcy. And that's scaring everyone a lot, because Genesis, you know, is one of the hallmark crypto companies. They were a large brokerage. They brought in lots of like Wall Street investors into crypto, and so then they became a lender. And so if they go down, you know, they are everybody's counterparty, which means that someone else might collapse, and that's sort of a chain that might never end.
And I know we're trying to get to the bottom of exactly what happened at FTX. When do we find out? I know there's investigations, regulators are looking into it too.
So everybody seems to be looking at it. Regulators in the US, even the company itself now, they have a new CEO. They're trying to figure out what happened exactly, if customer funds were used in sort of illegal ways, how they got into trouble in the first place, if it was like a trading hold. So, it's so much is known, so much has been written about this company, but so much still has to be figured out.
And what happens next then in terms of timeline? What are you looking at for the next couple of weeks and then months?
Obviously, we're looking at Genesis now, seeing what happens there. And then, we've already seen that from Genesis, there's been a sort of contagion into Gemini, the trading platform owned by the Winklevoss twins. They had to stop redemptions on their lending, on one of their lending products. So I guess we're going to follow and see sort of everywhere, really. There were also lots of hedge funds that had accounts with FTX, so we're going to follow there and see who some of the biggest creditors might be. There was a list that came out, but it was redacted, so we don't really know who the big creditors are.
Anna, thank you so much. Anna Herrera, Bloomberg's senior crypto editor, of course, on the fallout and the story that just keeps on unfolding in unexpected ways. Now, we're also joined by Hannah Smith, Vice President for State Street's ETF business. Hannah, thank you so much. Every time you come on, there's like a big news story. So I was thinking, like, Hannah's coming on. What's it today? Do you have any exposure to crypto through any of the ETF funds?
No, we also, well, firstly, good morning, Francine. Thanks for having me on the show. We don't have any exposure. I think what we're seeing at the moment is there's still quite a lot of uncertainty within the crypto market. So I think it's, we have to see how it plays out and what the implications are.
So today you look at markets, again, a bit of a mixed bag like we often have when you have a lot of Fed speakers and then the focus is on China and what happens with the oil price. Like, what do you think will be the driving momentum for the markets?
I think at the markets, obviously, the central banks have been driving a lot of the volatility that we've seen, and they've been really focused on bringing down inflation. I think what we're expecting is that's going to actually shift soon into more of a growth focus, the slowdown in growth and the implication that that's going to have. And so we sort of expect that rates are likely to peak in Q1 2023, and then we're actually anticipating cuts typically 25 to 30 weeks after that, so around Q4 2023. That's our expectation.
And so given all of that, where do you put your money right now? What seems good value?
Yeah, I think it's really difficult right now. I think at the moment what we're recommending is to have underweight in equities at the moment. Equities aren't actually really pricing in much recession risk. The PEs are still quite toppy, and so we would recommend sort of being underweight in that area. Overweight cash, given the yields that we've seen there, and obviously commodities, given the inflation environment. It's a similar story to what I discussed last time, but commodities as well.
Overweight cash, dollar.
Yes, exactly.
I mean, at some point the dollar, and there was talk about it kind of reaching peak and slowly coming down. Is this the time for it?
Yeah, I think I think given the weaker CPI number that we saw coming out of the US, it definitely feels like we may have reached the peak, but obviously one data point doesn't create a trend, and so we still need to see what the subsequent numbers are, and given the volatility that we've seen within the CPI prints, I think it's challenging, but we do definitely think that we are starting to reach that peak rate now.
Hannah, is there a misunderstanding of the markets that they see actually peak inflation, and is there maybe a belief or a longing for then inflation to come down more quickly? And you have Fed speakers, that keep on saying is we'll have to raise interest rates again, maybe not as aggressively, but if we were going to hit that target, it will be quite painful.
Yeah, I think there's obviously a huge focus on peak rates, and I think the market is really on tenterhooks every time we have a CPI print, because it's really dependent on the performance of many asset classes, rates, and what the path is going to be from here. As I mentioned, I think that we are coming closer to that point, and I think the time to go pro-risk is probably when the yield curve starts to flatten. It's still inverted, and typically it stays inverted for 3 to 5 quarters. So we would expect it will probably flatten around mid next year, and that would be when would be the time to go pro-risk within equities.
So the Fed obsession is not abating anytime soon?
No, I don't think so. Wherever the Fed goes, the world leads, and so obviously there's a huge focus on the Fed, and as there should be. They've been laser focused on bringing down inflation, and that's their job, that's their credibility, and so the market is going to be watching that with a keen eye.
What are you buying on the yield curve?
I think on the yield curve, the long end of the curve is now looking very attractive. So given where rates rates are at the moment on the 10-year. I think that's kind of where the spot is, particularly if we're now reaching peak rates.
Hannah, when it comes to China, so again, we had the surprise, the market was pretty happy that it was opening and maybe we could have a more stable, or certainly putting aside the zero COVID policy. Doesn't seem the case.
Yeah, it's interesting. One thing that we say regarding China is watch what they do, not what they say. And so obviously last week we saw this rhetoric that perhaps there'll be a more soft approach to the zero COVID policy, and now that seems to have changed given the death that we saw more recently related to COVID. And so I think China's interesting. It's obviously trading very cheap versus the developed markets. Emerging markets in general are trading, I think, on the debt side at a 95 percentile, so they've only been cheaper 5% of the time, and on the equity side at a 40% discount to developed markets. So there's definitely attractive valuations, but as we know with emerging markets, valuations aren't enough of a catalyst. We have to see that zero COVID, a change to the zero COVID policy in order to give investors some reassurance that that's not going to continue to damage the economy.
So you're not playing the China market right now?
I don't know, not at the moment.
Is there anything else in emerging markets that looks attractive? As you say, it's not all about valuations, it's also the path forward.
Yeah, absolutely. I think if investors do want to gain exposure to emerging markets, then LATAM, where they're huge commodity exporters, and so they can benefit from the rise in commodity prices. So that would be the area within emerging market, which looks more attractive. But obviously investors have to have the risk appetite for it.
Yeah, they certainly do. Hannah, thank you so much. Hannah Smith there, Vice President for State Street's ETF business. Stays with us. We'll talk about the UK and the EU shortly. Coming up, Fed officials have broadly maintained their steadfast stance in the fight against inflation. JP Morgan's Kalanovich, though, sees more downside risks until the Fed stops hiking. We'll discuss more of that next, and this is Bloomberg.
The top names in climate change are on Bloomberg.
Building out local wind, local solar, hydrogen, these are solutions to not just climate issues, but geopolitical issues.
We are in a position by 2030 to have 80% of all electricity generated by wind.
Renewables are the safest, the cleanest, and the cheapest form of energy today, especially for countries such as Greece.
Nobody covers climate change like Bloomberg, your global business authority.
As we work to bring policy to what we call a sufficiently restrictive stance, which really in simple terms means the level required to bring inflation down and restore price stability, we will need to be mindful. Adjusting too little will leave inflation too high, and adjusting too much could lead to an unnecessarily painful downturn.
Well, that was the San Francisco Fed President Mary Daly speaking about the potential impact of Fed policy. Her Cleveland counterpart, Loretta Mester, said she's open to slowing the pace of rate hikes. And then JP Morgan's Klanovich says the Fed will have to start reducing interest rates for there to be sustained rally in risky assets, but that's not likely in the near term. Well, we're back with Hannah Smith, Vice President for State Street's ETF business. Hannah, we were talking a little bit before about inflation dynamics in the U.S. and the fact that, you said rightly so that one CPI number in October does not make a trend. It seems that inflation in Europe would be stickier anyway. Is that a fair assessment?
Yeah, definitely. Obviously, Europe has the implication of the Russia-Ukraine war. It's more heavily felt, and so the inflation there is definitely going to be slightly more stubborn than what we're seeing in the U.S.
So are you buying any, or are you, should clients be exposed to European equities?
European equities are actually really interesting because if you look at the valuations, they're currently trading at a 35% discount to the US. The average is around 70%. So if you look at that, we believe that there's a significant amount factored in for the Russia-Ukraine war, and so it could pose an attractive entry point. However, there is still a lot of uncertainty related to Europe. So again, it depends on investors and their risk appetite, but it is one to watch.
But what's the right entry point? I mean, how do you call it bottom, given all of the uncertainty?
Yeah, and this is the million-dollar question. I think, as I mentioned earlier, the peak rates could be, within the US, could signal, an interesting point at which to reassess there.
The UK, there's been so much going on, and I know every time there was a prime minister leaving or something happening, is now because of the, stabilization to some extent with the fiscal autumn statement, is it a good time to come into the UK assets?
Yeah, UK assets have had a really good run this year, and the reason for that is because they're very defensive in nature in terms of the sector allocation. They also have higher exposure to energy, consumer staples as well. In addition, the falling pound is beneficial as 80% of companies generate their revenues overseas. So the UK is a good defensive play, and it has performed relatively well.
What's your world of ETF right now? There's always, I guess, for years, so much copy written about the fact that because of the tax incentives in the U.S., it's just such a bigger market compared to Europe. Are we catching up?
Yeah, Europe's definitely catching up. I think what we're seeing in Europe is that the investors are utilizing ETFs because of their liquidity, and particularly during this year, where we've seen so much volatility. When the VIX spikes, we do tend to see more flows into our ETF range. For example, after the CPI print, the US CPI print, we saw 2.7 billion inflows into the ETF, the UCITS, European domiciled ETF space. And so it definitely does respond.
So Hannah, is it changing the nature of the market?
I think that it's providing additional sources of liquidity. So, for example, in the fixed income space, trading fixed income ETFs, they trade intraday, they trade on the secondary market. And so what we're seeing is when investors want to enter or exit the market quickly, or if they want to make tactical bets, then they utilize ETFs to do that because they're able to trade relatively quickly and with ease. And also the price point is attractive for ETFs as well.
All right, Hannah, thank you so much, as always, for coming on. Hannah Smith there, Vice President for State Street's ETF business. Now, coming up, chaos at Twitter leads Tesla into a tailspin. More on the world's richest man and his companies next. This is Bloomberg.
When I started, I had no idea it was going to turn into this, which is a tracksuit empire. I don't have any investors. All this is all money in. This is me going out and hustling, bringing that money back, and just building it, building it, building it. You gotta think about a person that was homeless at one point, didn't really have any money coming in. The fact that this person was relentless and just determined to succeed and not let rock bottom define him as an individual. I can take things and put them together and take them apart and make them better and put them back together. I respect the craft, so I don't want to minimize and disrespect the value of each step of the craft and do by machine what should be done by hand.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now let's get straight to the Bloomberg First Word News. Here's Alice Atkins. Hi, Alice.
Hi, Francine. COVID restrictions now weigh on a fifth of China's economy as infections continue to rise, undermining Beijing's call for more targeted COVID-0 measures. More than 27,000 new cases were reported on Monday, near a record, with the southern manufacturing hub of Guangzhou the current epicenter. Many local authorities have been expanding testing and shutting schools and offices despite recent directives to ease measures. Malaysia's king has summoned political leaders for an audience at the palace later today. Lawmakers from key bloc Barisan Nasional earlier informed the monarch that they don't support ex-premier Muhyiddin Yassin as Malaysia's next leader. The country's politics were thrown into disarray after the weekend snap polls led to a hung parliament. Italy has approved a €35 billion budget law for next year, including plans to raise a windfall tax on energy profits. The new budget, the first by Giorgia Meloni's right-wing government, will increase the windfall tax rate from 25% to 35%. Over €20 billion will be allocated to relief for families and businesses facing high energy prices. NASA's new Orion crew capsule has come within 80 miles of the moon. Its path took the spacecraft over the Apollo 11 landing site, where astronauts first touched down on the moon in 1969. NASA's uncrewed Artemis 1 mission launched from Florida last week, in a first step towards sending people back to the moon. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Francine?
Alice, thank you so much. Now, Elon Musk has laid off more Twitter workers from the sales side of the business, further trimming a headcount already diminished by cuts and resignations. Elsewhere for Musk, while signs that China is increasing COVID-0 curbs rather than moving away from them is adding to a litany of investor worries over Tesla. Joining us for more on Tesla is Bloomberg's global auto czar, Craig Trudell. Craig, I mean, what is going on? Like, I used to be obsessed with Elon Musk's tweets, but frankly, I just don't have the time.
Yeah.
Because he's on it all the time, and Tesla's not doing great.
Yeah, I think the highly online CEO giveth and the highly online CEO taketh away, right? I think, absolutely China is a big concern for them. They've had to cut price recently, and there was a sort of bearish note late on Friday that maybe there's sort of, concerns swirling in the market about, the need for further price cut.
Yes.
We're seeing it become an even more competitive market, with even Mercedes last week doing a big price cut. And I think, the sort of amount of tweeting that he's doing is just a very obvious signal to the market that he's extremely distracted and has his hands full with Twitter.
Yeah, so if you're a shareholder, you're probably not all that happy with your Tesla stock right now. What do you do about it?
You're not, and you're asking increasingly for a stock buyback. That's been the sort of buzz on of all places on Twitter. Elon's fans asking for the company to consider a big buyback. This was actually something that came up on the earnings call last month, and Elon addressed it in a highly unconventional way, sort of openly talking about the idea that the board is, deliberating over this, the possibility of a $5 to $10 billion buyback, being something that could be done. But he's also more recently referred to the idea that this is up to the board, so he's sort of, deferred to them.
So, what kind of timeline are we talking about if there is a potential buyback?
I think, the comment on the earnings call was 2023. I think, of course, that's going to be dependent on just how confident, management and the board are about cash flow and sort of the state of the business. And so, maybe this is a way for the board to signal confidence, but also it may be a little bit of, sort of there may be a bearish takeaway from this that, the stock, that the cash couldn't be put to use, in other ways. So it could cut both ways, whether they do this or not.
Great. Actually, Elon Musk and how he thinks, maybe more than most. Like, what's his strategy right now? I know every time I ask a difficult question also, which surprises me, on Twitter, there's always someone on Twitter that, tweets at Elon Musk as if he was going to tell us off. Like, is he now become the kind of the policeman of the world on social media?
I think he thinks that, he seems to obviously think that he can cut to the bone here without really damaging the service. And, even if it's a sort of, car crash that he's putting on, it's going to attract eyeballs. I think the thing that breaks down for people trying to understand what he's doing here is how the heck he's going to turn this into a business that advertisers are interested in. I think, there are people in Silicon Valley who are willing to work for this guy, even if it is, a really difficult environment. Clearly, he's pulled this off before. But the big question at this point is, how the heck he's going to get advertisers back on the platform.
Yeah, but is there a danger that actually if he focuses too much on Twitter, then he forgets the rest?
Absolutely. And I think there's a question of, does he need to bring in help for one business or the other? Because he clearly there's a confidence problem on the part of both of these companies and the sort of intermingling of them.
Craig, thanks so much, as always, for coming on. Our Bloomberg Global Autos Tsar and Elon Musk whisperer, Craig Trudell. Coming up, we talk about the growth of gaming and esports with the co-founder of Games Workshop, Sir Ian Livingstone. That's coming up next, and this is Bloomberg.
COVID has changed everything. People are changing the way they work and the way they travel. Can you explain what you mean?
I think the world is never going back to the way it was fully before the pandemic. And one of the changes, I think, David, has been a change in how we work. Many people had a job at an office. They're not going to be required to come back to the office 5 days a week. And I don't think CEOs per se are going to determine these policies. I think workers will, because all of us CEOs, I think, want the best talent. And I think flexibility is going to be the second most important benefit after compensation. All of this, David, has culminated in Airbnb not just being a company about traveling, but now a company about living. So there's this whole new category of travel that's not classic 2-3 nights in a city. It's not long-term housing, and it's completely emerged because of the pandemic.
No one covers the world like Bloomberg.
My team thinks 2023, we avoid a recession. I'm a little more skeptical about that.
China and the U.S. both do not want to see nuclear force on the European continent.
The regulators here in the Bahamas are ongoing with their investigation into FTX.
With unmatched reach and resources from more than 120 countries, the moment news breaks 24 hours a day. Bloomberg, your global business authority.
Downshift gains momentum. The Fed's Mary Daly warns about the lag effect of rate hikes, while the right investor says 75 basis points is not needed next month. FTX fallout. Crypto firm Genesis warns of bankruptcy as it struggles to raise cash. U.S. prosecutors began probing Sam Bankman-Fried's empire months before its collapse. Plus, keeping the lid on oil whipsaws as Saudi Arabia denies a report saying OPEC Plus is weighing a production increase at its December meeting. Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, let's turn to the UK. Prime Minister Rishi Sunak addressed a meeting of the country's biggest employers yesterday, doubling down on his Brexiteer credentials.
Under my leadership, the United Kingdom will not pursue any relationship with Europe that relies on alignment with EU laws. Having the regulatory freedom to do that is an important opportunity of Brexit. And that's my agenda, and I'm confident that that agenda is not only right for the country, but can deliver enormous benefit for people up and down the UK in the years to come.
So we'll get back, of course, to Birmingham and the CBI. Let's now talk to a living legend of the global video game industry. He's Ian Livingstone. He received a knighthood for his services to the UK's gaming sector earlier this month. Now, he co-founded $2 billion game companies, GamesWorks and Eidos, the latter the company behind Lara Croft Tomb Raider. Now, an angel investor, Ian is general partner of the gaming VC fund Hero Capital, and we're very pleased to welcome him on Bloomberg Surveillance Early Edition. Sir Ian, there's so much to talk about. First of all, thank you so much for coming in. Look, the gaming industry is one of the big booms that we've seen over the last 10, 15 years. If you're a gamer, you live it, you breathe it, you don't talk about anything else. Maybe for outside investors, it's not something that you spend a whole lot of time on. How does the metaverse change this?
Well, the games industry has risen to a state where it's a $250 billion industry, some 3 billion people play it. Every time there's an advance in technology, it offers a new platform for games to be enjoyed. So it was originally PCs and consoles, and Facebook became a platform. Smartphones obviously became a huge platform for casual games, and then VR, AR, esports, and now we're talking about the metaverse. But it's the games industry that's actually built the metaverse. Games like Fortnite, where you don't just play together, you hang out together, you can transact together, you can go and watch a Travis Scott
concert together.
Concert together. So it's a place where the digital world can meet the physical world.
So how much bigger do you think the game industries, can actually be in the next 5, 10 years? The numbers, were we over-optimistic about how big it could get and how quickly, or are we underestimating it?
I think people have always been surprised that, no one talks about it because we don't have celebrity like film or TV or music. There are no kind of video game stars. They're all virtual. And in the UK particularly, we've created some of the biggest franchises in the whole world, but people don't know that. They think they come from the States or China or Japan. But it's set to grow because it speaks to Generation Z, because everything they do is interactive, the prolific use of social media, They live their lives together with their friends, and guess what? They want their entertainment to be interactive. So, of course, games speaks to that. It gives them agency and control. So they want to be in control of their entertainment as well as, instead of just being a kind of passive receptor of whatever you're fed by a director.
I mean, when you started Games Workshop,
Yes.
like, I know you were telling me like what it was like, which was tough, right, for a couple of years. But what did you see in the future that others didn't?
Well, we started off in 1975, and we kind of made it up as we went along, loads of mistakes, had to live in a van for 3 months. You go to a bank manager and say, "I've got this great game, it's a role-playing game," and he looks at you rather like a dog watching television, has no understanding whatsoever what you're talking about. But we were passionate about play. I mean, when you arrive in this world as babies, you interact with that world, you learn through play. And I think it speaks to us as human beings, that's kind of social aspect. So I could see that the game industry was bound to grow once it got enough games that spoke to everybody.
But the pace of change is incredible, right, in the gaming industry over the last 10 years because of our devices and VR and things like that. Is that pace of change going to increase even more? And what does it mean for putting capital at work where companies will become the next big thing?
Well, there's been a disconnect between the makers and the money. I don't think games companies have always been investor ready. They don't know how to speak to the money.
Yeah.
And I don't think the money really understood what good looks like. So I think there's a much greater engagement because, what makes a good game? The investors don't really know what that, but it's about investing in teams, not just the game. When people ask me what's the 3 most important things about a game, I'll say gameplay, gameplay, gameplay. Technology and graphics play a critical but supporting role, but it's the team that is so important. Those who've actually done it before, got some skin in the game, got some technology, got some intellectual property, and they've failed before. And so you leverage all their expertise, and likely as not, they're going to be successful one day.
So if you're a good investor, you're either a gamer or you have in your close vicinity someone who can test games for you.
Well, you
to
don't
understand the next big thing.
You don't have to be a gamer, but you need to have somebody on your team who really understands it. I mean, there are incredible success stories. Like there's a company in Wilmslow that I put some seed capital into called Playdemic. It's generating $200 million top line revenue per annum, 100 million EBIT. And the company was ultimately sold to Electronic Arts for $1.3 billion. There's only 80 people in that company. I don't know of any other industries where 80 people can generate that kind of enterprise value. And so post-COVID, the games industry ticks all the right boxes for success. It's intellectual property creating, high salaries, high tech, regional, which speaks to the government's wish. It's an instant export story because it's access global markets through whatever digital
and there's
platform.
no red tape, right, to export it because it's on digital platforms.
Exactly. So you can connect directly. It's a kind of business to consumer proposition.
Is the UK losing its star somewhat? It used to be, or have a lot of developers also from the outside, and I don't know whether it's a cost of living crisis, Brexit, maybe weaker pound, that will hurt that.
Well, the games industry in the UK has always been successful. There's some 2,000 studios here. Most of those are micro studios, but some of the biggest franchises in the world, from Grand Theft Auto to Tomb Raider to Fall Guys to Golf Clash, have all been created here. The common denominator, sadly, some might say, is that they're all foreign-owned. So whilst it secures inward investment and jobs, a lot of the profits is banked overseas. So I'd like to see greater investment in the UK in particular, so they can go further up the value chain of IP ownership.
What's your favorite game right now that we haven't heard of?
Well, that's been like
we're getting on to Christmas.
That's been like asking what's my favorite child now.
Which we all have one.
So, I'm old, so I can only play strategy games. So I play games like Civilization. There's a lovely little pixel game called Kinsey coming out soon. The usual hits will always be there. The new FIFA games will be extraordinary. It's whatever you enjoy playing yourself, because whether it's single player, multiplayer, and whether you want dexterity or just strategies, it's up to you. There is something for everybody now.
Zarina, as a venture capitalist, how hard is it to have one game that's very popular, so for a company to come up with one game that does amazingly well, and then to build on those successes? Some of the companies are a one-game wonder.
Yeah, but it's a great one to me. I mean, games like Candy Crush and Clash of Clans, they've been running for 10 years now. So it's games as a service, and they're optimized over time through analytics and data. So understanding consumer behavior, improving the monetization, the retention, and giving them more of what they actually enjoy doing inside a game. You can really move it from being, the risk profile of the games has just changed dramatically, because it used to be a premium price product in a physical box managing the supply chain to get to ultimately to a consumer in a retail store, and if that game wasn't as good as people expected, it'd come back in returns. Now you can address the global market and run it as game as a service, optimize it through data, and you can get 2, 3, 4, 5, 6, 7 years of revenue out of that game.
In WhatsApp groups of mothers all over the world, the one question is, how do I get my kids off some of the gaming because they want to do it 24 hours a day? I mean, is there an advice? Like, what happens?
Well, anything you enjoy doing, you want to do it a lot. I mean, I know people would play golf 7 days a week if you allowed them. You have to manage people's time.
Yeah.
It's a responsibility of adults in particular to manage their children's activities.
Do you see China coming back? And actually, there was a lot of regulation for Chinese to limit the amount of time they spend on screen and gaming. Do you think that it will reverse at some point?
Yeah, absolutely. Definitely. I mean, I know several Chinese games companies, Tencent in particular, because they acquired Sumo Group, which I was chairman of until January this year. And there's definitely a mood now to relax some of those constraints.
All right, really interesting. Sir Ian Livingstone, thank you so much for joining us today. I hope it's just one interview of many to come. Co-founder of Games Workshop and general partners at Hero Capital. Now let's get back also to the CBI conference. Bloomberg's Lizzie Burden joins us from Birmingham. Lizzie, opposition Labour leader Keir Starmer's turn to address the meeting today. So what's he expected to say?
Yeah, Keir Starmer's about to speak any moment now, Francine, and he's expected to say that the UK is over-reliant on immigration to boost its growth, and therefore he wants to end this era of low pay and stop the reliance on cheap labour. But of course, we've heard this time and again, in fact, from various Conservative prime ministers. So the question really is going to be, how can he do that? Can he convince the room full of business leaders that he's got a plan to make things any different? And in fact, I was speaking to the CBI president, Brian McBride, earlier. He said that we do need some low-skilled labour in the UK, like the baggage handlers. And he also said on the growth question that Labour would face many of the same fiscal constraints that the government has faced. And that means it's going to be even more difficult to balance fighting inflation with driving the economy. But growth is what the CBI wants to see.
Lizzie, thanks so much. Lizzie Burden there at the CBI conference in Birmingham. Coming up, it's a circle of life. Bob Iger takes his first step to reshape Disney after returning as chief executive officer. We have all of the details of the turnaround. That's coming up next, and this is Bloomberg.
China's appetite for energy is enormous. The country consumes about a quarter of the world's energy supply, 35% more than the US annually. Its energy needs have more than tripled since the year 2000. That consumption has helped to fuel astonishing growth, but it's come at a cost.
China is the world's largest greenhouse gas emitter. There is no way to tackle climate change unless China reduces its emissions to net zero.
The country's reliance on fossil fuels is also a hindrance to its own growth and the well-being of its citizens.
China is not energy secure. It has a massive import bill for things like oil and gas. It has a long-standing pollution problem, and it is also prone to outages that severely hamper industry.
All this has led the world's biggest polluter to take steps towards a radical transformation.
A lot's happening on Wall Street.
I'm quite encouraged. The center is holding.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
A lot of these areas still have very, very good valuations.
From businesses most influential and instrumental.
It's knocking it out of the ballpark.
Now's not a great time to be speculative. It's time for a pivot.
We're talking about a significant hit to our standard of living.
Bloomberg Wall Street Week, live Friday with replays all weekend on Bloomberg Television and Radio.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition on Francine Lac right here in London. Now, it's a whole new world at Disney. Well, Bob Iger got straight back to business after making his surprise return as chief executive, taking the first steps to reshape the media giant. Now, for more on all of this is Alex Webb, who leads our tech and media coverage for Bloomberg Quick Take. I dare you to sing all of that. It's a brave new world.
Don't tempt me.
Don't
tempt me.
Alex, when you look at it, feels like actually he has a plan and he needs to strike hot.
Yeah.
Like, what does it tell you about what's been happening in the last couple of months?
Well, it hasn't been shining, shimmering, splendid.
It's singing, please.
No. So, look, what's happened is that early in the pandemic, activist investor came in, said to Disney, you need to cut the dividend, invest that money in content for Disney+.
Yep.
Netflix was trading at 50 plus price to forward earnings. Disney was trading at 25-ish. In doing so, it became a growth stock essentially, and its earnings valuation overtook that of Netflix. Now, since then, we've seen growth stocks punished as interest rates go up. Netflix has come down, Disney has come down with it. At the same time, there's been a huge amount of internal disgruntlement, partly because creative decision-making has been taken away from TV studio leaders, film studio, all that sort of thing. So what the first step we're seeing now from Iger is
giving that back. So that was a mistake. So is this basically him trying to fix the mess of the person that's been charged for 2 years? Or is it a different strategy?
It seems as though he's kind of righting the ship a little bit. There are two pieces to this clearly. There's, as I alluded to, the kind of investor element. They've lost a little bit of confidence in the company. At the same time, internal morale also been suffering. So what we've seen now, he a memo to employees, which went out yesterday. Bloomberg's obviously got it. It's fixing the second piece. It's fixing the internal morale. What then happens on the investor side, we're yet to see. Disney had completely scrapped the dividend. It's been reintroduced. It's about 20 cents per share at the moment. Prior to the new strategy where they pivoted towards Disney Plus, it was closer to 90 cents. The question is now whether Iger continues to invest in Disney Plus and just sells the story better, or it reinstates a higher dividend.
But is there a problem going forward? And Bob Iger, and we saw the share price up 10% yesterday. Now, so intrinsically, the name of Disney, that it's going to be difficult going forward to recruit anyone else.
Not necessarily. I think that, look, Disney is still the biggest studio in Hollywood. It has Fox, all those Fox assets as well. It's got these vastly successful franchises. The difficulty they have is that the old cable model, which is really what printed money for them, ABC, ESPN, were the hugely profitable parts of their business. One of the reasons those things are so profitable is because the way the cable works, you would have 18 to 2-year contracts. That money would flow through the cable operators to Disney. Now, with the direct customer streaming service, from month to month, the customers can churn out. They can say, actually, do you know what? I don't want Disney Plus. That means you've got to invest really heavily in content to keep the bait going, to reel them in and ensure they're continuing to pay for it.
Alex, with Bob Iger back, does it put much more pressure on rivals?
Potentially. Ultimately, there's a huge bun fight for the best IP, the best intellectual property in terms of scripts, directors, talent. Disney is the big beast in the middle of that. It's maybe had a slightly rough few months, but ultimately, Chapek wasn't in the job that long. And if you think about the cycles, how long it takes to make a movie, there could well still be films that are yet to be released that were ultimately greenlit still by Iger a few years ago. So, he's not really been there long enough to cause substantial damage.
Brilliant. Alex, thanks so much. Alex Webb there, who leads our tech and media coverage for Bloomberg Quick Take and did not break into song and dance. Let's get straight to your Bloomberg Business Flash. Here's Alice Atkins. Hi, Alice.
Hi, Francine. SocGen and AllianceBernstein have agreed on a partnership that merges large parts of their equities trading businesses. The joint venture will be run out of London under the Bernstein name and will unite the cash equities and equities research units of the two firms. The French bank will hold 51% of the new business. Elon Musk has laid off more Twitter workers from the sales side of the business, further trimming a staff already diminished by cuts and resignations. Last week, the billionaire asked workers to commit to his more hardcore version of the company or leave the business. Almost 5,000 staff have quit or been fired since Musk's takeover. Enel is to sell off assets worth 21 billion euros to cut debt. Italy's biggest power company has maintained its adjusted net income target for next year between 6.1 and 6.3 billion euros. The company had already reduced its guidance for this year, citing the effects of the energy crisis in Europe. Enel's debt hit a record of almost 70 billion euros at the end of September. That's your Bloomberg Business Flash. Francine.
Thank you so much, Alice. Coming up, we're back in Qatar as controversy continues to cast a shadow on the Football World Cup. This is Bloomberg.
Go. After hardly a full year of name, image, and likeness deals being a reality, UCLA quarterback Chase Griffin already has more than 20 deals with major brands, venture, and charitable groups, all while balancing graduating undergrad in just 2 years and fighting for playing time on the field.
Chase Griffin out of the gun. We are joined by UCLA quarterback Chase Griffin. Not just UCLA quarterback, but name, image, likeness superstar. I am psyched for this one.
This kid could actually be the president of the United States someday.
When it comes to building generational wealth, it's not about the money that you make in college. I'm very excited that I made the amount of money that I made last year. I am even 10 times more excited that I know how to make that money.
Enjoy the excitement of a night of music at Boston Symphony Hall with BSO Now. Watch brand new Boston Symphony Orchestra performances, behind-the-scenes storytelling, and memorable archival concerts, all from the comfort of home. Use our free 24-hour trial and see why the Boston Globe calls it musically rewarding. And the Berkshire Edge says the orchestra has never played better. Visit bso.org/now, where the music plays on. BSO season sponsored by Bank of America.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, the first full day of the 2022 World Cup in Qatar saw Iran versus England, the Netherlands against Senegal, and the U.S. play Wales. So the tournament in full swing, but not without more controversy. Well, Bloomberg's Simone Foxman joins us from Doha now. Simone, the England-Iran match was a key focus yesterday. How did that play out?
Yeah, well, there weren't signals of support for LGBTQ after those armbands were banned, those rainbow-colored armbands were banned. But we did get a surprising show of support from the Iranian team for demonstrations back home. The team did not sing the national anthem. Perhaps we should have known this because the captain on a Sunday night press conference mentioned how he wanted the team to be a force for good, but many of us surprised watching this to see so stark a statement from a team that's so typically been associated with the regime. And in the stands, we got a measure of how much of the protests are impacting the spectators as well. Many came out with Persian flags. Some of those Persian flags were confiscated, it sounds like. Others were singing the Persian anthem, note, not the Iranian anthem. And then others had banners reading "Women, Life, Freedom," the slogan that has been so closely associated with those protests just across the pond in just across the Persian Gulf over in Iran.
Yeah. So, Simone, yesterday we saw 7 European teams say they wouldn't wear rainbow-colored armbands, which is exactly what you were just talking about, and walked us through, some of the reasons for that. Overall, is a sense that the tournament in Qatar will just crop up with controversies every day, or are you expecting things to settle down a bit?
Yeah, on this issue particularly, shows of support for LGBTQ rights. I think this is one we may start seeing again and again. So we talked about that armband story, how FIFA essentially threatened sporting sanctions for players who wore these armbands. And then we heard about the situation of several fans who were turned away from particularly the USA-Wales game for wearing rainbow-colored hats, a shirt with a rainbow on it. It doesn't seem right. Organizers have said these displays should be allowed within the stadium, but what we're clearly seeing from security is that that is not necessarily being enforced. We've also heard perhaps of some scuffles on the ground essentially around this issue. I think this is the issue that's going to crop up as more people pour into Doha, as it gets busier here.
Simone, thank you so much. Simone Foxman there in Doha with the very latest. Now, Bloomberg Surveillance Early Edition continues in the next hour with Matt Miller and Kay Lyons in New York, Anna Edwards in London. Now, the picture for the markets is an interesting one. So let's see if we can get the boards up. Again, quite a lot of Fed speakers over the next couple of hours. Now, because of this, we started the day with a mixed bag in terms of stocks. Now, if you look at what the momentum is for a lot of stocks that are gaining, oil majors are also rallying. The European stocks 600 overall gaining 0.9%. Shell, BP amongst the biggest drivers. I'm also looking at, for example, U.S. pre-market trading. Zoom Video falling, though, after reporting slower sales and trimming its full-year revenue forecast. The dollar weakening against all major currencies, treasury yields declining. The other thing in focus is, of course, these Fed officials broadly maintaining their steadfast stance to fight against inflation. But we heard from Loretta Mester and Mary Daly. So the San Francisco Fed President, Mary Daly, saying that officials need to be mindful of the lags in the transmission of policy changes. Her Cleveland counterpart, Loretta Mester, saying she's open to slowing the tempo of rate hikes. Let's also have a look at some of the groups that are on the move the most. Now, it's very clear that oil, coming up trumps when it comes to some of the biggest gainers that are on the move. Gold also rising on the weaker dollar. Of course, cryptocurrency. I mean, where do we start? Cryptocurrency, our biggest story of the day. Prices there are a little bit mixed. Investors bracing for more ructions as further digital asset sector bankruptcies could be looming following the demise of FTX. Energy coming up trump. Basic resources, travel and leisure gaining between 3.8 and 1.4%. I only see consumer goods slightly on the downside. So it does seem like there's momentum picking up for a lot of these stocks in Europe. We'll have a full roundup, not only of the Fed speakers, but also on markets throughout the day. This is Bloomberg. nurturing also can come from men, and it's one of the qualities, I guess, that you found in your mentors that also pushed you up. Do we need even more nurturing post-pandemic? Is the way that we talk with employees going to change?
I think talent becomes the single biggest differentiator of a successful entity versus an unsuccessful entity. So you've got to do everything possible to hire, train, retain, put your arms around talent. I mean, you've really got to focus on your talent. In the past, it's always been give them money, show them that they have an upward mobility and can make even more money, and that's the only reason people come to work. I think post-pandemic, we're seeing more and more people say, I have to worry about me as a person. I have to worry about my family. I want to worry about my well-being, my mental health. So we've got to start encompassing people as holistic humans as opposed to a tool of the trade, which means that we have to engage with them head, heart, and hands, not just head and hands. The heart has to be engaged. So we have to show more empathy, show that we care, that they're citizens of the community, they're members of the family, and all of those have to come into consideration as we help an executive or an employee be an employee and be a person of the community and the family. The stakes are higher.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Crypto going down will be sub 10,000 on Bitcoin. I think that actually potentially happens even this year.
It's the lowest it's been since 2020, and I think it's the highest it's going to be for years to come. The vast, overwhelming majority of participants in crypto are speculative investors who are just looking for a quick win.
We've seen a failure of the financial services industry around crypto. And that looks like a liquidity crisis and a liquidation cascade. It's extremely damaging, but it is not reflective of the underlying economy that's being built in crypto.
This is Bloomberg Surveillance, Early Edition, with Anna Edwards, Matt Miller, and Kaylee Lines.
It's 10 a.m. in London, 5 a.m. in New York, and 6 p.m. in Hong Kong. Our top stories today. More fallout from the collapse of FTX. Digital assets brokerage Genesis is warning that it may need to file for bankruptcy if it can't raise new capital. Societe Generale and AllianceBernstein are teaming up in a new partnership. The two will merge large parts of their equities trading businesses. And Bob Iger takes his first steps toward reshaping Disney. Iger wants his deputies to rethink the corporate structure, and he announces that a top manager is leaving. Welcome to Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Matt Miller and Kaylee Lines in New York. And Kaylee, from a European markets perspective, a focus very much on oil prices and oil stocks. Crypto still in the headlines, but the macro backdrop still very topical.
Yeah, and on the subject of that macro backdrop, Anna, we are just getting some breaking headlines out of the OECD publishing their new growth forecast for 2023. They expect growth to slow to 2.2% next year. That's down from 3.1% forecasted for 2022. And of the big G7 economies, they expect the UK growth forecast will be the weakest over the next 2 years. The chief economist at the OECD saying that fighting inflation still must be the top priority, even as we are faced with slowing growth, and goes on to say that further monetary policy tightening is, quote, essential. So again, 2.2% growth forecasted for next year from the OECD. And of course, the growth picture in China in particular is what Asian markets continue to focus on, as was the case overnight, where it really was a mixed session for equity markets. You had markets like Japan higher, which lifted the MSCI Asia Pacific Index higher by about 0.4% overall, but still seeing the weakness in Hong Kong, and Chinese tech stocks listed there, especially the Hang Seng Tech
Index down about 3% overnight. Interesting to see, though, that the yuan is still strengthening against the U.S. dollar today, although pretty much everything is stronger against the U.S. dollar on this Tuesday morning. The yuan stronger by a little more than 0.5% to just shy of the 714 level to the dollar, and the Japanese yen strengthening as well, trading at 141.28, Matt.
All right, I'm taking a look at S&P futures that are climbing by a bit right now, just up about 0.25%. A lot of green on this screen, but don't be fooled because on the second row here, we have a color that should be red, actually. Basis points, 3.5 basis point drop on the 10-year yield down to 379.32. Of course, that's green because bond traders want to know if their price is going up or down, but this is showing the yield with a down arrow. NYMEX crude right now up 0.5%. We're seeing Brent rise about 0.5% as well. Not huge moves in the energy sector if you look at it from a zero basis, but if you look at the big swings that we've seen, it makes a huge difference, which is why, Anna, I'm sure you're focused on energy being a huge gainer in the European market. Interestingly enough, if you look at the Stock 600, tech stocks are down. So that doesn't fare well for U.S. futures, even though we have U.S. cash trade, even though we have a gain in futures. Bitcoin right now is up about 1/3 but still at 15,681. So this is the lowest level, as you heard Patrick Armstrong saying, sort of gloating about at the top, that we've seen since 2020. But it's crazy because to me, it feels like we should be at a decade low, right? We're only at the lowest level that we've been in 2 years on Bitcoin. So even though we're down under 16,000, it just doesn't feel that bad to me. Anna, what do you see in terms of Europe?
Yeah, let's have a look at the European picture. And as you rightly point out, Matt, a lot of focus on energy names. The bright green of Spain down here, the UK also not doing too bad. And both of those have some weighting towards energy stocks. In particular, the energy names on the rise because, of course, we saw that wild swing that Matt was talking about there in oil prices yesterday around the time that European equity markets were closing up. And so Europe has some catching up to do perhaps on that. But also, European equity markets were more lackluster than this. Since we've seen US futures pick up a little bit, that has allowed risk appetite to increase here in Europe as well. Let's have a look at where we are on energy stocks then, up by 3.7% on those energy names as we've seen the oil price, and this is Brent here, 87.73. We dropped as low as 82 in session yesterday on those reports around whether Saudi Arabia was going to increase production. Saudi Arabia came out and denied that, said no, we're not planning that, and OPEC Plus is of course biased towards cutting. That has been their most recent action, and we have a meeting from them shortly. So that is going to be the focus of things. So that taking the oil price back up to where we started, essentially back up to $87 a barrel, but the volatility was intense in the meantime. Societe Generale, we mentioned this is in the headlines, the French bank, the stock not on the move very much, but a really interesting story which we'll get more details on in a moment. This is SocGen tying up in a joint venture for its equities part of the business with AllianceBernstein, and it is to do with cash equities. It's also to do with equities research. It's going to be a business based in London, interestingly. And Enel is up by 1.7% this morning, the energy major over in Italy. They've been on a deal spree. They've been buying up renewable energy assets. They now have a big debt pile, and they're going to have to sell off some of those assets. So reducing their exposure in South America and also in Eastern Europe, Matt.
All right, we're going to talk about a couple of those stories right now. But I want to get first to the crypto story. The brokerage firm Genesis warning it may need to file for bankruptcy unless it can raise a heck of a lot of money. $1 billion. Emily Nicole, reporter, Bloomberg crypto reporter, joins us now for details. So what's the latest we're hearing about Genesis and the continued fallout from FTX?
Well, it's as you said it, Matt. They're warning investors now that if they don't secure the $1 billion loan that they're after, that they may have to file for bankruptcy, which would make it just the latest in the names that we've seen so far this year: FTX, Celsius, Voyager. But they're obviously still hoping that that's not the case. Spokespeople told us that that really is a last resort. At present, you know, they're still talking to potential investors about that $1 billion loan. We reported that Binance was potentially involved in the talks at some point, but a spokesperson for Binance declined to comment any further on that.
Okay, so there were these talks with Binance, perhaps. Good to see you, Emily. We're now hearing the FTX, back to where this story, well, I was going to say started, didn't really start with FTX, but certainly a big recent participant. We're hearing that FTX has $1.24 billion in cash across all its entities. Does that improve the situation? How does that sit in relation to expectations?
It's a slight confidence boost for creditors, I bet, because, I mean, on Saturday they had filings from FTX that said they only had about 560 million in cash. So that's only a matter of days, and they've managed to double the amount. But it definitely shows that it's really proving to be a headache for those trying to manage the bankruptcy process for FTX. There are more than 130 entities that the group owns. There are disparate bank accounts, some that they've been able to identify and verify, some that they've been able to identify but not verify the cash inside them, and more bank accounts that they're sure are out there but they don't even know of or where they are. And so it does seem like this will be a pretty drawn-out process to see whether or not FTX does have enough money to be able to repay the creditors that are on its lists.
All right, Bloomberg's Emily Nicole, thank you so much. And on the subject of FTX, not even celebrities are immune to the fallout from its collapse. Sports stars, including Tom Brady, of course, of football, and Steph Curry, the basketball star, are among the big names a Texas regulator is investigating over potential securities law violations tied to their promotions of FTX. The state securities board says it's looking at payments they received to endorse FTX US, along with what disclosures were made and how accessible they were to retail investors.
Are you gloating?
Well, for the record, Tom Brady, I am not his biggest fan, so that is why Matt asked that question. And we can continue this conversation, Matt, and talk more about the broader fallout from FTX later today on Bloomberg Crypto with Matt and myself. 1 p.m. New York time, 6 p.m. in London. We'll be speaking with Chainalysis co-founder Jonathan Levine and Circle CEO Jeremy Allaire. Anna.
Okay, so that's the story around crypto. SocGen and AllianceBernstein, as I mentioned earlier, are merging large parts of their equities trading businesses. Bloomberg banking reporter Stephen Aarons has been covering this story for us. Steve, very good to have your thoughts on the program. So what exactly is happening then by the putting together of these two equity parts of the business?
It's an acquisition.
Yeah, well, it's a JV, first of all, but SocGen will have the majority stake. It will own 51% if the deal actually happens. Said they expect it to close before the end of next year. They will hold for 51%, sorry, but they have an option of buying the entire thing within 5 years. So they will actually have the option of becoming a really big player in equities or boosting their already sizable business. Clearly seeking growth here, especially after BNP, the big sort of arch nemesis, if you will, in investment banking in France for them, has already grown extensively, buying stuff. And so, I think they're trying to keep up with the competition here.
I am of the school, Stephen, that the word merger is a PR spin term. There is no such thing. This is an acquisition, which is why SocGen comes away with 51%. What does it mean, though, for the competition?
Yeah, okay, I give that to you, actually. On the competition, BNP, as I said, they've been buying. As you may remember, they bought the prime brokerage business from Deutsche Bank a couple of years ago, and they also sort of took on clients from Credit Suisse when they pulled out of prime brokerage not too long ago in the wake of all the scandals they had. So they've been growing quite substantially. It's been quite successful for them, how they've been expanding the equities business. Many European business sort of investment banks are pulling back, and BNP has become bigger, and now it seems like the incoming CEO, at SocGen, his name is Slavomir Krupa, he's the current investment banking head. It seems he's got big plans to expand that business for the bank to make sure it doesn't fall behind.
All right, Stephen, great story. Thanks so much for joining us. Stephen Aarons runs our bank coverage out of Frankfurt. Now let's get to the media story. Disney's returning CEO, Bob Iger, taking his first steps toward reorganizing the entertainment giant. Iger has asked his top deputies to rethink the corporate structure to their benefit. Guggenheim's Michael Morris spoke with Bloomberg yesterday on his outlook for Disney under the new old leadership.
I think that this company needs to really refocus itself on its Disney-branded content more than anything else and right-size its spending to maximize that value, as opposed to just sort of growing a subscriber base without necessarily the type of profit objectives that I think a great company like this could achieve.
Alex Webb of Bloomberg Quick Take joins us with the latest on Iger's plans. So what do we know so far? It's only been 1 day, right?
Yeah, we've seen a memo that he has sent to the employees in which he outlines plans for a reorganization, which ultimately seems to be taking it back to the old structure. There had been a push by Bob Chapek to take a little bit of decision-making power away from the TV and studio heads. There was a certain amount of disgruntlement about that. The creative abilities or creative oversight they had was diminished. That was seem to have been poor for morale. So he's trying to fix the internal problems, the communication with the markets, and therefore the share price. That has to come at some stage as well, whether he will increase the dividend and perhaps decrease the spending on Disney Plus, as we just heard the Guggenheim Partners team saying. That remains to be seen, but that's something that investors might be looking for.
Okay, I'm sure there'll be no shortage of people with ideas as to how they should change the business, and we heard just one of them there in the introduction, Alex. What about key movement of personnel then? We're hearing about one particular executive leaving the company. What does this tell us, if anything?
Yeah, we've seen some the top ally of Chapek seemingly leaving, the head of the kind of media distribution arm, I think it is, and it seems as though maybe some power had been pulled towards him as part of this decision-making creative process. Now, that is kind of being undone, and we're seeing Bob Iger, as we say, go back to this old model that he had before, the one that seemed to work for him so well. Now, the thing is, this is a slightly different situation now from the company that he left. When he left Disney, they had Disney Plus, they weren't kind of all in on Disney Plus in the way that Chapek was, because there had been an activist investor came in early in the pandemic, and they had said, cut the dividend, use the capital to invest in Disney Plus, turn the company into a growth stock similar to Netflix. The valuation was rewarded as a consequence. The price to earnings ratio overtook that of Netflix, but since then we've seen growth stocks punished. The valuations of both those companies have come down. So for all of the internal stuff to do with the creative process, ultimately there's capital allocation issues, which are really what the market's going to be looking at.
All right, Bloomberg Quick Takes, Alex Webb, thank you so much. And what Alex was just talking about, how growth stocks have started to fare differently, how things have changed since the pandemic, is translating to another stock I want to pay attention to in pre-market trading this morning. That would be Zoom. Reported its slowest sales growth on record and trimmed its full-year revenue forecast, really showing how those stay-at-home pandemic darlings have seen their fates change in a dramatic way in the aftermath. This stock is down 85% from its peak in October of 2020, and it is adding to those losses this morning after its results, down about 9% before the bell. Another stock moving fractionally lower that is worth, actually now higher, GameStop up about 0.7%, but this is after a loss of about 9% yesterday. Of course, it has been wrapped up in the FTX saga. Also, we got news overnight last night that Carl Icahn has built up a large short position in this stock, so that is one to watch. And another stock I've just been watching over the last several weeks is Tesla. There are a number of headwinds at play here, including its China business, with now about a fifth of the Chinese economy equivalent on lockdown. Also, the fact that Elon Musk seems pretty distracted by Twitter. So this is a stock down more than 20% in the month of November so far, but a little bit of recovery happening this morning with the stock up about 1% before the bell, Anna.
Okay, let's get back to where we started this hour, in fact, Kaylee, and the news around the OECD. The OECD just released its latest economic outlook, predicting global growth will slow to 2.2% next year. We'll be hearing from the OECD's acting chief economist next hour. That's at 6:30 a.m. in New York, 11:30 a.m. in London. This hour, we'll speak with Anna Stupnitska, the Fidelity International global macroeconomist. What does she make of the OECD's assessment? How ahead of the market or otherwise is that assessment of growth for next year? What does she make of the UK lines, comparing them to the G7? This is Bloomberg.
If you do any kind of business in this country, there's a pretty good chance that you're going to see that business registered in Delaware. Why? Because that's where you do it. And our point was Wyoming can be that venue for blockchain enterprise, for crypto.
It's not the Wyoming way to sit around and wait for change. We want that independence, we want that freedom, we want that individuality. And that's a common theme that brings together bipartisan support for this in Wyoming.
We want to make sure that people understand, especially in Wyoming, but as the United States as a whole, this trend is coming. It's not going to stop. This is more of a small town that's growing into what I would call the cryptocurrency version of Silicon Valley.
It's the philosophy of that rugged individualism, the independence, and the ability to really get things done for yourself and control your own destiny. You get that from a blockchain, and you don't get that without it.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Welcome back to Bloomberg Surveillance. This is the early edition. I'm Matt Miller with Kaylee Lyons here in New York. Anna Edwards with us out of London. I'm looking at volatility, and it's surprising to me that we've seen, we've all seen and felt this huge uptick in bond market volatility. That's this blue line here. In FX volatility, that's this yellow line. For those of you listening on radio, those lines are higher. A line that is lower is equity volatility in white. Why isn't it keeping up? Joining us to talk about this is Priscilla Azevedo Rocha, Bloomberg credit reporter. So Priscilla, how come bonds are seeing so much volatility when we're not really feeling it in the equity indexes?
Well, hi, Matt. So bonds, they, like the moves in markets, they permeate slower through bonds when compared to equity markets, right? In equity markets, they react to headlines faster than bonds. So in bonds is literally the result of a year of really bad returns for investors, and that's what we are seeing.
That's what we're seeing then at that level. What about the big macro picture at the moment, Priscilla? Update us on where we've got to on the whole Fed expectations saga around the terminal rate and how much hiking there is still to go. Yesterday we heard from Mary Daly emphasizing the need to consider lags, but even she was saying that doesn't mean, we're done with hiking rates, there's more hiking to come.
Yes, that's right. So basically investors, they are looking at the broader picture, right? Because you have a lot of volatility in markets still, and you need to look at the broader picture instead of particular comments, because otherwise you'll be trading on the headlines. So investors, they are focusing on the Fed's ultimate message, which is to contain inflation.
And when we talk about containing things, Priscilla, if we could speak about China for a moment, because I noticed in the Bank of America Fund Managers survey that came out last week, when people were asked where the biggest risk of a credit event emanating from, the answer was China. China has taken steps to shore up the property market. We thought they were moving toward reopening. Now there's some question marks around that as COVID cases rise. Just what does risk look like in that market in particular at the moment?
Risk is still very much elevated. As you said, they're doing things to contain the property market, and this is very positive for investors. But at the same time, questions linger around the reopening schedule, right? We've seen this morning headlines that this might be pushed post-winter when COVID infections go higher and there's more risks there. So we are still unsure about the timeline and when we're going to see China opening again.
Okay, thanks very much, Priscilla. Bloomberg's Priscilla Azevedo Rocha with the latest on credit markets and beyond. For more market analysis, check out MLIV Go on the Bloomberg terminal. That's where you find the Markets Live blog. This is Bloomberg.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
What do you think of when you think of a battery? For most, it's what we use to power devices for both work and play, and maybe even your car. Over the past few decades, they've gotten way more powerful, long-lasting, and affordable. But all of this is just a prologue to what the next batteries are going to do.
As we drive to an increasingly renewable power-driven grid, we also need to be able to store energy and release it later to cover those periods of weather intermittencies that are driving this new grid that we're in. It's a multi-trillion-dollar opportunity, and it's imperative that we figure out the solution here.
How we store energy on a massive scale is in many ways the central challenge of the fight to stop climate change.
In a multi-trillion-dollar industry, there's a lot of ground to cover.
Commodities got absolutely crushed.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg.
This is Bloomberg Surveillance Early Edition. I'm Kaylee Lines with Matt Miller in New York and Anna Edwards in London. Now keeping you up to date with news from around the world, here's the first word. In China, an increase in COVID cases has led local authorities to reintroduce measures like expanding testing and lockdowns. It's now estimated that a fifth of the country's economy has been affected. That's despite Beijing's call for more targeted, less disruptive COVID-0 measures. Goldman Sachs is forecasting that the S&P 500 and its earnings will change little next year. The firm expects margins will contract due to upward cost pressures from wages, commodities, goods, and services. Goldman urged investors to own defensive sectors with low interest rate risk like healthcare and consumer staples. Billionaire investor Carl Icahn holds a large short position in GameStop. Bloomberg has learned that Icahn began shorting the video game retailer during the height of the meme stock frenzy around January 2021. Shares have lost 71% of their value since then. And the richest person in the world has seen his wealth decline by more than $100 billion this year. According to the Bloomberg Billionaires Index, Elon Musk's fortune has fallen to a little less than $170 billion after Monday's $8.6 billion loss. His stake in electric car maker Tesla comprises the bulk of his fortune. Those shares have fallen 52% this year. And Matt, it raises a question of how much of that is really for fundamental business reasons for Tesla, with concerns around China, for example, and how much of it is key man risk, because this is a man that looks very, very distracted on Twitter.
He does. I do think it's fascinating that even after losing $100 billion, he is still the richest man in the world. If you type RICH, Rich Go, into your Bloomberg terminal, you can see that he's still well ahead of Bernard Arnault, Gautam Adani, Jeff Bezos, Bill Gates, Warren Buffett. So he's still way up there, Anna.
Yeah, we'll see if he keeps tweeting and we'll see what happens to Twitter and all the money he put into it, won't we? Let's tell you what's coming up in the program. We'll speak to Joost Beaumont, ABN AMRO Senior Fixed Income Strategist. What does 2023 have in store when it comes to fixed income markets? Does he expect rates to fall? Does he think demand for fixed income will return? We will talk about whether we'll see a turnaround for fixed income fortunes in the year ahead. This is Bloomberg.
the biggest challenges for General Dynamics and what are the biggest opportunities?
So I think in any business, the challenges are solving complex problems that come to you. You know, the problems that come to me and my senior leadership team for resolving tend to be highly complex and nettlesome. So your ability to solve those complex problems are an important element, I think, of the value that we add to the company. And then I think opportunities, you always want to make sure that you've got a creative enough mind and open enough mind to be able to see around square corners. What am I missing? You know, the why questions are really powerful. Why are we not doing this, or why are we doing this? I ask those questions a lot, and in the answers, you can sometimes tease out some real opportunities, some hidden things. But thinking creatively about opportunities and problems is really important.
And what about the industry generally? Do you think they have big challenges now as the defense budget probably comes down a bit?
So I think that we are all responsible, and we have an obligation to find the latest and best technologies that we can for our customers and deliver them in the most cost-effective manner we can. And I think that that's a challenge and an opportunity for all of the big defense companies.
The markets count down in Europe. From the financial centers of the world, Bloomberg Markets European Close with Guy Johnson in London and Alex Steele in New York. Real-time numbers, real-time analysis, weekdays. Bloomberg's covering all things crypto, the people, the transactions, and the technology. Bloomberg Crypto, today on Bloomberg.
This is Bloomberg Surveillance Early Edition. Here's what you need to know. More fallout from the collapse of FTX. Digital asset brokerage Genesis is warning that it may need to file for bankruptcy if it can't raise new capital. Societe Generale and AllianceBernstein are teaming up in a new partnership. The two will merge large parts of their equities, trading businesses into a joint venture. And Bob Iger takes his first steps toward reshaping Disney. Iger wants his deputies to rethink the corporate structure, and he announces that a top manager is leaving. I'm Anna Edwards in London with Matt Miller and Kaylee Lyons in New York. And Matt, I know it's a holiday-shortened week in the US. It is starting to feel a little bit like that. Plus, we had the distraction of football here in Europe, of course. And that definitely weighed on volumes, actually, in yesterday's session. How does the futures picture look stateside?
Yeah, I mean, it feels that way as well here. I can't wait to go home to the great state of Ohio. And it's a football week for us, too, obviously, as we get to beat Michigan on Saturday in the Horseshoe. So I'm excited for that. S&P futures right now up about 0.2%. So a little bit of gains here as we see the yield on the 10-year come down. 379.32 is the level there. Crude coming back up after the roller coaster ride we had yesterday. Are the Saudis going to boost output for some odd unknown reason? Or are they going to continue with their 2 million barrel OPEC plus output cut? That makes more sense. And so the market is now buying oil, both NYMEX crude and Brent on that. Bitcoin right now is up just a little bit, but this measures the move from, I think, midnight or from 5 p.m. yesterday. Doesn't matter. The point is 15,720 is the level, and that's the lowest level that we've seen basically since this time in 2020. So the lowest level that we've seen in 2 years at 15,718, and the question is, will it fall further as we get more fallout from FTX? Anna, what do you see in terms of, Kaylee, what do you see in terms of the U.S. market, pre-market?
Glad you remembered my name, Matt. Well, I am, of course, always watching crypto-related stocks, but I have my eye on some other movers in pre-market trading this morning, one of them being Zoom. Of course, a pandemic-era darling that is not such a darling anymore. It reported earnings after the bell yesterday, slowest revenue growth on record, plus it trimmed its full-year forecast. So that stock is down about 9%, and remember, it's already down 85% from its all-time high in October of 2020. Tesla, though, is rebounding up about 1%, but it has had a brutal November, down about 20% over the course of this month so far because of headwinds from China and Elon Musk being distracted by Twitter. A lot to watch for that stock in particular. And on the subject of China, of course, we saw overnight Chinese technology stocks under pressure in the Asian trade as we contend with the COVID outbreak. Headlines in China, about a fifth of the Chinese economy is under restrictions for the virus right now. So as a result, JD.com is down about 3%, and you got Bilibili down by a little more than 2% as well. Anna.
Yeah, now time for Europe. Let's have a look at the European picture then. Stocks in Europe up by 0.4%, led by energy, up by 3.6% for energy names here. And this as a result, of course, of all the volatility that Matt was alluding to. We saw that in markets yesterday, went down as low as $82 on Brent, back up to 87 or so as the market dealt with the reports, then denied in terms of what was going on with oil production out of Saudi Arabia. Societe Generale down by 0.7%. They're putting together their equities business, the cash trading bit, and the research part with the same type of business at Alliance Bernstein. They're going to have 51%, though, crucially, over at SocGen of that joint venture. And Enel in focus, that stock is up by 1.1%. Asset sales at this company. This is an energy business, previously very much a fossil fuels energy business, but they've been buying up all kinds of renewable energy assets. They've got a debt burden now, and now they're having to sell off some of those. So South America, they're reducing their exposure there, and also in Eastern Europe, Matt.
All right, so we'll continue to pay attention to what goes on over there. I'm also continuing to see headlines come across the terminal from Keir Starmer saying that Labour should start a private wealth fund of a sovereign wealth fund, I guess it's called when a country does it, and that the Brexit deal isn't working, but that the UK needs to make Brexit work. It's always interesting to me how conservative the Labour Party is starting to sound. Let's get right now to Joost Beaumont, ABM AMRO senior fixed income strategist. And Joost, I want to ask you the same question I asked a fixed income reporter that we had on earlier. Why so much volatility in fixed income? Really, fixed income and FX are seeing a lot more volatility than equities right now.
I think that's largely related, of course, to financial markets now being in a kind of tug of war about what central banks will do. Will they continue to hike aggressively, or will they have reached a bit of a peak, and will they slow down rate hikes or even stop tightening monetary policy? And that, of course, determines a lot the rates in the bond market. So therefore, I guess we see this volatility spiking.
And is that set to continue, that volatility, Joost, as we still try to grapple with where the terminal rate is and how long we take to get there? Do you think we are near the top, and what does that do to that level of volatility?
Yeah, I think we will continue to see quite a lot of volatility. Of course, it's still very uncertain times, and I think markets run a little bit ahead of themselves after the U.S. inflation numbers. What was it recently? When they thought, well, okay, the Fed will slow down rate hikes, etc., and so riskier assets actually doing pretty well. The outlook for the economy is still pretty dark. We will enter a recession, a deep one in the Eurozone, a more shallow one in the US. At the same time, we will see central banks being rather hawkish. We've seen it on the Bloomberg wires, comments from central bankers. They need to keep hiking interest rates. So 50 basis points for the ECB is more or less a done deal. We expect 50 basis points more in Q1. But yeah, next year will be a different story, to be honest.
And thinking about what the ECB does, Joost, they're also changing the way that the TLTROs program works. So that's the cheap loan program they have to the banking sector. And many banks deciding to pay back early, and there's some changing rules happening there. What is it the banks are going to be selling to enable them to pay back those loans? And is that something we need to be aware of?
Yeah, good question. Yeah, it's actually quite interesting. We wrote quite a note about it, and banks have a lot of excess cash parked at the ECB. So the first means to repay TLTRO loans early would, in my view, be cash that they are not using and is just stored at the ECB. That can already be covered quite a large part of repayments. Otherwise, banks might need to sell some holdings of government bonds or other highly liquid assets. But actually, banks haven't really beefed up these investments since the high take-ups of the TLTRO. So actually, there'll be mainly cash, and maybe they will issue a little bit of more bonds to refinance.
What do you expect from corporate issuance in the coming year, Joost?
I'm not really a corporate specialist actually, but given, of course, especially if you look for the energy transition, companies in that area need to invest quite a lot. So there we can see maybe a bit of a pickup, but I'm more looking at bank issuance and just finished a bit the supply forecast, and there we've seen, for instance, in the covered bond space, in the euro-denominated area, we see in a record year of issuance this year, and actually next year we will continue to see quite large issuance volumes there. And also in the senior non-preferred space, I expect banks to be rather active. So it will be a busy year, and that is, of course, also related to banks cannot rely on the cheap funding of central banks any longer. They need to rely more on wholesale funding. We might also see loan-to-deposit ratios going up again as households need to tap their savings to pay for energy bills, higher mortgage bills, and their groceries. So that also means banks need to issue more on the wholesale market. And of course, despite the recession, we still expect bank loan growth to continue to be positive, albeit less strong than we've seen in previous years.
Joost, you mentioned how there's no longer cheap financing from central banks. We're also focused on what ultimately the terminal rate is, how long we stay up at the peak, but there's also a question of where we get back down to. Are we ever going back to the zero, low interest rate world ever again?
No, I think that is quite unlikely, to be honest. In that respect, we've really seen a paradigm shift where central banks are now more in tightening mode, governments, of course, in supporting mode, and that's a clear difference from the past, from, say, after the global financial crisis. I think that is likely to remain the case. But if you look for central banks, next year we will see inflation coming down. You already see pipeline inflationary pressures reducing. Gas prices have gone down, food prices are coming down, electricity prices are coming down. So next year we will see inflation coming down. We will see economies struggling. So that will actually also lead to a change in the tone of central banks. And actually we expect the Fed and the ECB already to start cutting rates in the second half of next year.
Joost, thanks very much. Thanks for joining us. Joost Beaumont of ABN AMRO. Thanks for coming in to speak to us on the programme. Coming up, we'll continue some of these conversations with Anna Stupninska, who joins us, Fidelity International global macroeconomist. Just what are the prospects for recession in the United States next year? How does she reflect on what the OECD has announced, bringing down its estimates for global growth? This is Bloomberg.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
Power, policy, politics. From the White House to the Hill, Bloomberg covers the leaders in legislation.
That was really a tectonic shift for this White House.
The theory of this bill, as I understand it, is there'll be a multiplier effect.
How did Democrats mobilize specifically younger voters?
Bringing you the political news you need to know.
The president has made it very clear that this is a significant focus.
For the intersection of Wall Street and Washington, nobody covers politics like Bloomberg.
This is Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Matt Miller and Kaylee Lyons in New York. Now, in its new economic outlook, the OECD sees a significant slowdown in global growth next year, but it's not expecting a recession. Joining us now is Anna Stupnitska, a global macroeconomist at Fidelity International. I think that's on a global basis, not expecting that recession. We can get into the US in a moment, but sticking to the global then, Anna, thanks for coming to talk to us. The OECD predicts that global economic growth will slow to 2.2% in 2023. How does that fit in with your analysis?
I think it makes sense. We do expect a recession in key developed markets as well. I think 2.2, even though of course it's still positive growth, but not a recession. It's still a significant slowdown for global growth. Looking at the sort of the trend that we have seen in the past few years. A recession would probably be around 1% on a global basis. So we are still above that, but it does fit with our view on the recession. And I think it's consensus now. The main question for us is how deep the recession is going to be and how long.
Okay, and let me ask you about the US specifically. How convinced about recession are you there? Because actually, there seems to be quite a range of expectations. I know a lot of economists think we are going to see a recession. If you look at some of the Fed's models, they put quite a low probability on US recession next year.
Yeah, a lot of different estimates. We do think, or our models show the probability of recession is somewhere between 50 and 60%. And this is our base case scenario. We characterize this recession scenario, though, as either a cyclical recession, so a recession that comes about as a result of the shocks that we're seeing, but mainly as a result of policy tightening, or a balance sheet recession, so where rates go so high that it triggers issues or debt-related issues. And we don't see that balance sheet recession just yet, although risk is very high. So we are carefully watching. So our base case is a recession in the US, but relatively shallow for the time being.
Yeah, it's worth noting, you may have just seen on the full screen here that Bloomberg Economics model puts the probability at 100%, which is pretty strong, to say the least. In Europe, is it going to be much worse? Will we see a short, shallow recession here and a much deeper, longer recession in the UK and the EU?
I think potentially deeper in Europe than in the US, obviously given all the issues we know about, and the uncertainty related to the war. The war is still ongoing, and there's no end in sight, it seems. The UK is particularly vulnerable on a number of metrics. We are talking a lot now about the potential issues in the housing sector. And again, the housing sector is cracking across the world in major developed markets. But again, UK seems particularly vulnerable to that interest rate shock, to the income shock that is upcoming. So potentially, yes, recession can be very deep in the UK.
In terms of what we see in other countries, how does it look around the world? I mean, we're always so focused on the UK, Europe, and the US, but of course you've got Asia and emerging markets to think about, as well as the rest of North and South America.
Yeah, well, that's quite a long list of countries. I just want to say, in terms of the housing market, what we are watching, and as I said, this is mainly developed markets, but of course, the hotspots, we know countries like Norway, Sweden, Australia, New Zealand, Canada, this is where the housing markets have been overheating a lot over the past few years and didn't even suffer in the global financial crisis. Now that shock is going through the system, and we have to carefully watch what that means for those countries, but also potentially can it turn into more systemic shock to the rest of the economy.
Yeah.
As far as emerging markets are concerned, as we know, a lot depends on China. China is transitioning. We don't expect that it's going to bounce back really quickly, given all the COVID-related restrictions and, of course, the restructuring, that very complex transition process. So again, very selective across EM, but we do think that Asia-Pacific potentially, excluding Japan, can do quite well as China starts rebounding very slowly in 23.
Anna, just because you brought it up, I would point everyone watching and listening to the Big Take story on the Bloomberg and online today, which talks about the housing market in Canada and how it is deflating in a very material way. If I could just pick up on your point on China, though, I'm trying to get a grip on how that story plays into the growth and inflation picture. Because on the one hand, if China doesn't come online in the immediate term, or at least medium term, that is not great for the global growth story, considering it's the second largest economy. But also in theory, that gives central banks a boost on the inflation fighting side.
In terms of the PBOC, or you mean, yeah, of course,
for the ECB or the Federal Reserve, who wants to see inflation get down, China demand coming back and boosting commodity prices as a result seems like it would make that job a lot harder.
Yeah, no, that's true. Of course, if we see a really big bounce in China growth and demand coming back, that would boost inflation, and that would spill over to the rest of the world. So certainly this is one risk factor in a way. As I said, the base case, we don't expect this to happen. So in terms of that inflation pressure, China is probably not going to be such an issue for the rest of the world. But actually, it doesn't even need to be an issue, because the inflation issue is so well entrenched in other countries that the central banks will still have to continue fighting it and keeping financial conditions very restrictive for a long time.
Well, to that point, Anna, we have heard from central bankers, regional Fed presidents for the Federal Reserve, for example, continuing to reiterate that message. We are going to continue to fight inflation until the job is done. How much of that do you think is the Fed actually forecasting what it will do, and how much is that them just talking the talk to push back against an easing in financial conditions?
Yeah, part of it, of course, is expectations in terms of they're trying to send that message to control inflation expectations to some extent, and it is working. Yes, they're pushing back against the easing in financial conditions, but ultimately they are watching not the markets. They're watching not the survey data, not the soft data, but the hard data. And of course, the hard data is lagging, so inflation, labor market, etc. So they might be sending some signals and sort of preparing the market for a restrictive stance for longer, which they will have to achieve actually physically, without just guiding the markets, but actually getting there, because inflation is so sticky. And actually, they're already in the restrictive territory, and we don't think that the talk, the expectation of the pivot, the long-awaited pivot they've been talking about all year, we don't think it's relevant anymore. They are going into restrictive territory, probably to 5% or so in terms of policy rates. And it doesn't matter what they say, because that is going to continue damaging growth, damaging earnings, and putting pressure on financial conditions.
Okay, Anna, thank you very much for your analysis. Anna Stupnicka of Fidelity. And we'll continue to focus on the global economy. Coming up in the next hour, we'll hear from the OECD's acting chief economist. That conversation at 6:30 a.m. in New York, 11:30 a.m. in London. This is Bloomberg.
When I started, I had no idea it was going to turn into this. It's a tracksuit empire. I don't have any investors. All this is all money in. This is me going out and hustling, bringing that money back, and just building it, building it, building it. You gotta think about a person that was homeless at one point, didn't really have any money coming in. The fact that this person was relentless and just determined to succeed and not let rock bottom define him as an individual. I can take things and put them together and take them apart and make them better and put them back together. I respect the craft, so I don't want to minimize and disrespect the value of each step of the craft and do by machine what should be done by hand.
Lisa, you've got to explain this one to me. What does it mean when the White House says we're watching markets carefully?
It means they have a Bloomberg.
I've seen the Bloomberg.
They have
I've been in and seen it.
Lots of Bloombergs. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg.
I've seen the Bloomberg. I've seen the Bloomberg. I've seen the Bloomberg. I've seen the Bloomberg. What does it mean? What does it mean? What does it mean? What does it mean? What does it mean?
It means they have a Bloomberg.
This is Bloomberg Surveillance Early Edition. I'm Kayleigh Lyons with Matt Miller in New York and Anna Edwards in London. Now let's take a quick look at what is coming up for the rest of today. South African President Cyril Ramaphosa will be meeting with King Charles III on his first day of his state visit in the UK. Then Hungary will be releasing a rate decision at 8 a.m. Eastern. The central bank is expected to keep its monthly base interest rate unchanged. On the economic data front, Euro area consumer confidence will cross at 10 a.m. Eastern time. Plus, we'll hear from more Fed speakers, including Loretta Mester, again, as well as Jim Bullard. And finally, we'll also be watching the FTX bankruptcy hearing in Delaware, Matt. And if only that were the only crypto-related bankruptcy thing we are watching, but we also are watching Genesis, which has warned if it can't raise $1 billion, it could have to file as well.
That's right, and it obviously affects, we've been talking about Gemini's lending project. Of course, Genesis is the Barry Silbert-related entity, and Gemini is the Winklevi exchange. So it's interesting to see two other huge companies in crypto could go bankrupt because of the FTX bankruptcy. After all that we're hearing, it doesn't seem like this would be the end of the contagion completely, because of course those two have counterparty risk as well.
Yeah, it's really interesting, I think, Matt, how much we're talking about trust when it comes to crypto, when this is a business that isn't supposed to really be based on trust, but around facts. And this was true of the accounts attached to FTX. We've been warned not to trust those. I saw our colleagues reporting that Bain had been advising Tiger Global on its investments in FTX. How much can you trust that kind of due diligence? And our colleagues also trying to get to the bottom of who owns certain exchanges, one in China, for example, where it's not entirely clear. So it's really interesting the way that old finance is meeting this sort of the DeFi, essentially.
Yeah, it's fascinating, and I think, you know, we have to differentiate between the businesses built on, you know, selling the picks and shovels here and the actual gold or the actual Bitcoin. Right now, it looks like the currency is holding up relatively well at just under $16,000, so only a 2-year low.
Only. Of course, we'll continue this conversation later on today, Matt, on Bloomberg Crypto. That's at 1 p.m. New York time, 6 p.m. in London. So don't miss that. More Bloomberg surveillance is ahead. This is Bloomberg.
So as you look back on your career, what would you say is the best investment advice you've ever received?
Probably the best investment advice that I never received, but that I've lived my whole life around, is surround yourself with really good people. I thought about it just today, like I do many times, what makes a great investor? A great investment firm is comprised of people who are optimists and pessimists and realists. Because in the intersection of the debates that go across that wide range of personalities is where you find truth. It's part of the reason I'm so focused on freedom of expression. I see it in my own four walls, the robust and fulsome debates around how we commit our capital, what defines a good idea, what businesses to build or pursue. That's what drives the success at Citadel. And I've been very fortunate in life to have always had a group of friends who really push me, who make me better. And here I get to work with 3,500 colleagues who in their ways make me better each and every day. And collectively, as a team, we've had the opportunity to have an incredible impact on the financial landscape around the world.
From the world of politics to the world of business, Balance of Power with David Weston brings you news, analysis, and insight from and about politics power players. Balance of Power, weekdays on Bloomberg. Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question.
Great question. That's a question I get all night.
Bloomberg, top experts, great questions.
We're going through an inflection point right now, like we saw earlier this summer.
The economy's rolling over, the data's rolling over, and as hawkish as the Fed wants to talk, the markets are starting not to listen to it.
We don't really know how far and how fast inflation will fall.
A lot depends on what the Fed does. If the Fed slows down their very rapid rate of increase, will that allow us to avoid a recession?
We're still going to get a recession at some point, although maybe not right away.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Good morning, everyone. Jonathan Farrow, Lisa Abramowitz, and Tom Keene on radio and television. We're in holiday mode. No, we are not. It is a busy Tuesday up to the economic onslaught, the data dump that we get tomorrow. The data dump this morning is the price of Bitcoin dumps. I mean, Disney's there. There's this story, that story. Maybe oil's a story. We'll give you full World Cup coverage. But Lisa Abramowitz,
you're really promising
guess
a lot.
What? Bitcoin front and center. Sonali Basak to join us in 15 minutes.
It's not just what we have seen in FTX. This is not just an idiosyncratic moment. We're also seeing it in others. We're also seeing the potential for a big bankruptcy that is much more substantial, with Genesis potentially filing if they do not raise funds. This is the Winklevi, as you call them, and how much you end up.
They're in the story, aren't they?
Yeah, with something that is more of a contagion event, a la Peter Scheer's comments yesterday.
Yeah, to remind people that aren't involved in crypto, Winklevi are two twins where people quake, women quake and stop in their tracks when they come into the Bloomberg building, and these guys are challenged, aren't they?
Well, I'm not going to weigh in on either.
The Winklevi, but
like not going to comment.
They're
on that
challenged
one,
this morning with Genesis and the rest.
There is a question, an existential question of what's behind this. Is this an asset class that was built up during the era of free money that is coming down, and to what? And I think the question is, why have we not seen further fallout as of yet?
To bring you up to date, Robin Wigglesworth in the Financial Times publishing an hour ago a brilliant sum of this, quoting at length Sonali Basak in our crypto team reporting on Genesis, and we'll have that for you. 15,700 on Bitcoin after an ugly overnight as well.
Well, I will say that to me, the real tone is, last week we saw a shift. We saw better than expected news out of China, better than expected news with respect to the energy story in Europe.
It's not there.
Exactly. This week we're not seeing the same thing. We're seeing worse news out of China with lockdowns affecting potentially a fifth of the entire economy. You're seeing a cold snap in Europe that's testing some of the resolve that we have seen in terms of how much buildup of energy they have. And we're not necessarily seeing the fallout in markets, right? There's still resilience. And so here's the question is, why are we not seeing more?
Because they're looking at the Fed and doing the parlor game out to December 14th, I would suggest. Our guest is so important today. We're going to get right to it with a data check and Lisa's brief. Futures up 8, as she says. There's a lift to the market. It's fractional. It's even 0.2%, including the Dow Jones Industrial Average. John from Doha emails in and says, Tom, more quotes of the Dow, please. The VIX 22.44. Yield, well, a little bit of a story today with yield coming in, maybe some of the angst that Lisa's talking about. Dollar churning after a strong dollar yesterday, and yen 141.30. And I got to go to oil, which is sort of all over the proverbial petrol map. 80.58 on American oil, up nicely here on news over the last 2 days as well. I need a Tuesday before Thanksgiving brief.
All right, well, let's talk about it. It definitely is a Tuesday before Thanksgiving brief. We do get a slew of earnings, including some retailers, including Dick's Sporting Goods, Burlington Stores, Analog Services. To me, I'm really interested to hear from Dollar Tree. Before market, Dollar Tree has done really well this year, up more than 24%.
Wow.
And this is typical because usually the dollar stores, the discounters, do best in a downturn. I am watching to see what their outlook is, given that people are downshifting in the face of higher inflation and lower discretionary spending. Today, the roster of FedSpeak. Yes, Carrie.
Dollar Tree, I've got to interrupt here. You go to TRA on the Bloomberg terminal. We got to sell the terminal today so we can pay for the bird. Dollar Tree, per year, last 10 years, 14.4% per year.
Yeah. And
no one guessed that. I didn't guess that.
No, and it really speaks to the tale of two Americas, which I think is really interesting.
I'm so sorry for interrupting. Excuse
FedSpeak?
me, I'll
You
never
should.
interrupt
It's the reality.
you again. Thank you.
Please, everybody just note that. He just said that he would never interrupt again. I'm going to hold up a sign
Can I get some
every
pen,
time it happens
please?
again, because
Come
it
on.
will happen again probably in this show. FedSpeak today includes Cleveland Fed President Loretta Mester, Kansas City Fed President Esther George, and St. Louis Fed President Jim Bullard. Tom, you were talking about how we were hearing the roster of Fed speakers perhaps moving away from a hawkish stance. I don't know. The interpretation of the rhetoric is the same that we've heard before. They're going to necessarily downshift, but that's not necessarily bullish because they're not going to go to a lower terminal
And we heard
rate.
from Citigroup yesterday with comments on Bullard tilting to 7% terminal rate. I think he's got to recapitulate that today and finesse what he meant by moving the markets with a 7% yield. I mean, that's a stunning statistic.
I mean, although he did move it for about a half a second, and then it went right back down. So we'll see whose sort of narrative is the dominant one. So at 1 p.m., there is an auction. This one's a really interesting one, Tom. $35 billion of 7-year notes from U.S. Treasury Department.
Why is the 7-year important versus the 5 and the 10? What is it, some in-between maturity?
It's a less liquid security. It tends to be a messier auction because there isn't necessarily. I'm not talking to you like you're a dummy. You're asking me why I think it's interesting. I'm telling you why I think it's interesting. I like the 7-year auction. Look at those yields. Nearly 4%. There's been a distortion here. A lot of people seem to like this area.
Okay, well, okay, we'll go there. We'll give you the World Cup schedule in a minute. I'm looking it up. I think Argentina.
Did you watch yesterday?
I watched a little bit yesterday. That was fun. I mean, the U.S. game was like, wow.
They should have won.
Well, but Gareth's Gareth. You know, we've talked that for David Blanchflower to give us expertise on this in the coming days.
Unlike me.
On his wells. On Denmark, I believe playing today, Jens Nordvik joins us, founder and CEO of Exante Data. Come on, Jens, world stops, Denmark, Tunisia as well. What do you think? Denmark is really percolating with a chance here to make some noise.
Yeah, we'll hope they can do a little bit like England did yesterday.
Okay, see that terse comment there. Jens, let's get to it with the dollar. What is the 2023 view here on the dollar? There's been big figures moves this year. Can there be big figure moves next year?
So this year has been essentially one of the strongest in the history of the dollar, right? Massive run up against some of the biggest currencies in the world, like seeing the yen move and so forth. And then in the last couple of weeks, we've seen a big reversal within that bull move. And like our positioning indicators that we track at Exante Data have had some of the most extreme signals, right? Real money investors were very, very overweight dollars. All the trend following investors were really max long dollars. And we had this very violent washout. So now everybody kind of has to decide, okay, is this really a big change in trend, or is it just some kind of repositioning in the market? And the repositioning was definitely a big piece of what was going on. And we could already see as soon as the news from China, which was actually quite important to the turn in the dollar overall, as soon as that is less positive, the dollar kind of looks like it wants to go back to the appreciating trend, right? So I think for me, the key is global growth. we can talk about the Fed, and the Fed is important, but the most important variable for the dollar is what's going on with global growth. And if we still have a problematic growth situation in China, if Europe doesn't recover, then it's hard for me to see that there's going to be a strategic turn in the dollar. We can have like wiggles, and we had a big wiggle now over the last couple of weeks, but a strategic turn requires that global growth is going to get better. And for me, that's too early to make that call. We can go into detail with that.
Jens, you were talking about China, and that was sort of giving some fuel to this risk appetite, the idea that perhaps they were tiptoeing away from COVID zero. It seems like it's the opposite today, and yet the narrative in the market is not cooperating. You're not seeing the off move in equities. You're not seeing a strengthening dollar. What do you make of this? The idea that a lot of the reasons behind the rally are turning on their head, but the market is not.
Yeah, so the first thing I would say is that there's been optimism around China, right? And the optimism was based on the notion that there was going to be a move away from zero COVID policy. And what we're seeing in China is that there might be a desire to somehow relax those policies that have had a disastrous impact on the economy. But is it really feasible, right? We now have cases that are skyrocketing. We have a population that has been told that COVID was very scary and something that should be avoided at all costs. And this could go on for a long time in the sense that they only have around, call it 20,000 cases per day, right? Like go back to when we had a peak in the United States, which is a smaller country population-wise, where we had 1 million per day, right? So we're in the early phase of an acceleration, and this could go on for a long time. And are they just going to let it run? That's would be a kind of pretty strange way for them to go from one extreme to the other. So it's going to be a gradual, messy process here. I think it's going to be hard for the market to cope with that.
Although it seems like they're coping with it right now. Heading into 2023, it seems like the consensus is that you might see some more dollar strength, and then it will turn into dollar weakness. You will see Europe start to outperform. You will see Asia start to outperform. You will see the U.S. underperform. Where do you push back against the consensus right now?
Yeah, it all comes down to the inflation and the inflation expectations, right? We saw after the CPI print, one CPI print that was better than the trend we've had. Market rallied enormously. There was also after that the dollar had one of its biggest moves ever in a few days. So it really comes down to inflation. Have we turned the corner? Or we're going to have sticky services prices. I think it's pretty clear that goods prices are starting to normalize, but the market is also hoping that services prices will also normalize. If that's not the case, it's going to be a big problem for risk assets, right? Because that's being priced now that the worst is over inflation. If that's not the case, we're going to be back to having risk assets under pressure.
Jens, thank you. Go Denmark. Jens Nordvig with us. It's sounding data. I want to point out again, he won the beauty contest, institutional investor, 3 years in a row in foreign exchange. I think I could say no one's ever done that. I may stand corrected on that. OECD out with a stunning look. Let's remind ourselves, Lawrence Boone nailed this always away. Inflation statistics, Lisa, still 6.8% globally next year among OECD nations. That's not inflation going away.
And it's the theme of hiking into weakness that they really highlight. Perhaps not a recession, but pretty darn close, particularly in the developed world.
On radio and television, stop what you're doing. Next, Shonali Basek on Genesis. Good morning, Bloomberg Surveillance.
Keeping you up to date with news from around the world with the first word, I'm Lisa Mateo. Well, digital asset brokerage Genesis is warning potential investors it may have to file for bankruptcy unless it can raise money. Bloomberg's learned the firm is struggling to attract funding for its lending unit, which suspended withdrawals after the collapse of FTX. Now, Genesis has spent the last few days seeking at least $1 billion in new capital. The OECD says central banks must keep raising rates to fight inflation, even as the global economy sinks into a slowdown. In a new report, the organization warned that inflation and its impact on real incomes will only get worse if policymakers fail to act. It raised forecasts for inflation next year. In China, an increasing COVID cases has led local authorities into reintroducing measures like expanding testing and lockdowns. It's now estimated that a fifth of the country's economy has been affected. That's despite the central government's call for more targeted, less disruptive COVID-0 measures. Disney's returning CEO Bob Iger has taken his first steps towards reorganizing the entertainment giant. Iger has asked his top deputies to rethink the corporate structure. Meanwhile, he announced the departure of a top manager, the head of media distribution, Kareem Daniel. And the richest person in the world has seen his fortune decline by more than $100 billion this year. According to the Bloomberg Billionaires Index, Elon Musk's wealth has fallen to a little less than $170 billion after Monday's $8.6 billion loss. His stake in electric car maker Tesla comprises the bulk of Musk's fortune. Those shares fallen 52% this year. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Lisa Mateo. This is Bloomberg.
What do Formula One cars and your local supermarket have in common? Well, strange as it sounds, they might both be using the same technology. A lot of innovation has trickled down from the world of high-tech engines, and it hasn't just found a new life in road cars. F1 cars have long been thought of as the peak of cool, and technology in them is also helping to cool down our produce aisles. Engineers from Williams are using their knowledge from 9 Constructors' Championships, working with company Aerofoil to help reduce the energy consumption of supermarkets. The device they're building is based on the design of an F1 car's rear wing. It attaches to fridges to keep more cool air in the unit. They estimate it can reduce supermarket energy consumption by 25%. One innovation from F1 is also helping hybrids reduce their carbon footprint. That's KERS, or the Kinetic Energy Recovery System. In common parlance, it's known as regenerative braking and works by storing energy of the car decelerating in a battery for later use. If that's not enough, F1 is now looking at TERS, or a thermal energy recovery system, looking to harness the heat produced from braking and the engine exhaust. That could allow cars to generate the same power using 30% less fuel. So while F1 may have a reputation as a gas guzzler, some of its innovations in the name of speed are helping in the everyday fight against climate change.
The difference between endless research and a winning strategy. To improve your firm's productivity and profitability, Bloomberg Law combines the latest in AI-powered tools and in-depth analysis to accelerate the research process. To grow your practice and make better use of your valuable time. The difference is Bloomberg Law.
There's this downside of where we are, but there's also this incredible upside. People are chasing fusion. They're chasing green, blue hydrogen. They're chasing battery storage. Something's going to break through.
Bloomberg, your global business authority.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
A multi-trillion-dollar industry. There's a lot of ground to cover.
Commodities got absolutely crushed.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ. Monday on Bloomberg.
I think we have one more big leg down in crypto. I think we're going to see some selling off in Bitcoin. I think one of the things that supported it recently are the fact that there are a lot of whales who have invested interest in keeping it higher.
Peter Scheer on fire yesterday. We went from Katie Greifeld with a reporting on FTX or FTX, whatever it's called, over to Peter Scheer. It was really just quite good. Got picked up by the media, he really did the job yesterday. Honest, are you any more knowledgeable on BitDog than I'm still not. I still feel really dumb.
The one thing that I will say is to conflate Bitcoin with the entire crypto universe is a no-no.
I don't agree.
You will get hate mail.
I don't agree.
Okay.
I don't agree.
Well, let's see if Sonali Bassett
I
does,
think it's
because
an
I think
underlying. John Farrell on assignment today in Doha. Lisa Bramwitz and Tom King. We're going to drive forward the conversation now. And for those of you who are Global Wall Street, it's simple. Lydia Bayud, Sonali Bassett and company put together an important update on Genesis. Robin Wigglesworth 2 hours ago on the FT quoted that story at length here as we go into a movable feast of a difficult Tuesday for crypto. Ms. Bassett joins us right now. What are you looking for to happen with Genesis this Tuesday?
If they file for bankruptcy, how far does that contagion also go? So you have Genesis Lending, which is that lending entity that had been kind of caught up in this liquidity crunch here in the Bitcoin industry. But it is part of the empire that is run by a digital currency group that is Barry Silbert, former Houlihan Lokey banker, a creator here of what was a predecessor to NASDAQ Private.
Okay, we don't agree. She doesn't think Bitcoin's the underlying. I'm just adamant about this. There is an underlying to every transaction. How linked is all the basic chit-chat in the world you're in, what Katie Greifeld's doing, the rest of you, how linked is that to the price of Bitcoin?
Think about the freneticism over the last couple of days as Genesis sought to raise money for this unit. They were calling Binance, they were calling Apollo, and a lot of investors here were very concerned when they looked at it at the end of the day because they said, first of all, there are regulatory concerns here. Second of all, we're untangling all the contagion from the crypto industry. And third of all, it's like even investors here who wanted to get involved in the first place in this era can't get involved because of the aforementioned problems we've named.
I guess another way to ask what Tom is asking is we often look at the price of Bitcoin as a reflection of the contagion. Is that an accurate way of gauging out the weakness, or is this a haven almost amid the storm in more peripheral crypto assets?
The reason it's not an accurate way is because people put real money in to then buy Bitcoin. And so the idea here that there's not an onboarding here is a false conception.
What?
And that it's not a real, it's not a fake asset that's flying in the ether. You pay money to buy Bitcoin. You use dollars to buy Bitcoin. You put your dollars in exchange. Let's take Coinbase's balance sheet, for example. It's $5 billion in cash, $95 billion in customer assets held one-to-one. People are worried about that one-to-one. Therefore, you have Coinbase bonds trading at 50 cents on the dollar, 51 cents on the dollar. So yes, to your point here, people are worried about the underlying, but these are still companies that if there are underlying, people are willing to pay for them.
Why isn't there more transparency? There was a story today about FTX having actually more than expected reserves, right? That they had more than $1 billion of cash that they found, and people thought, wow, you have money to give to creditors. Why are we looking under rocks and in the cushions of a couch to try to find money for an institution that supposedly is real?
Yeah, and that's the important part. We're talking about the institutions now, not the underlying Bitcoin. And so when you're looking at FTX or you're looking at Genesis, people are peeling back the curtain here and trying to see what is this entity, who owes who what, and what did they do with that money?
But they're going into Delaware court today.
Yes.
Mr. Dunlop, he's an adult. The Delaware court is acclaimed, Mr. Musk learned that, for being adult. What are the adults in the room going to say to this unregulated, unaudited, offshore industry? I mean the broader industry as well as FTX, whatever it is.
They're going to say exactly what they're saying now, which is how much money do you have? How many assets do you have? How come you want to?
They're going to treat them like adults.
They're going to treat them like adults.
Are they going to get adult answers?
They're going to try to. Yesterday, you had or over the weekend, you had a statement from FTX saying they hired Perella Weinberg, real U.S. investment bank, going back and looking at the assets, trying to figure out what assets they could sell, what assets they can recapitalize, And there,
I said this says a surveillance remote from the Bahamas is what it says.
I think everything
First week of
says.
December.
I think
Or
everything
Delaware
says
and
surveillance.
Fifth Avenue.
Yeah, I think that surveillance in the Bahamas is what everything says. I am wondering, Shonali, as you talk, there is a rumor, and I don't want to spread rumors, but we've talked about it on this show before, that perhaps certain institutions are so entrenched in this asset class that they have a vested interest in not mass selling and in trying to keep things afloat and finding an entry point. So how much are you hearing about that? That basically there is enough commitment to keep it going for now until something further breaks.
a lot about that now, because you could argue that this wasn't started with FTX. You could argue that this started months and months ago when the cracks started forming in the Bitcoin industry to begin with.
Oh, come on, this started when it was 60,000 and went to say 40,000.
But how did it become 60,000? It was levered up to 60,000.
Okay.
That's the problem. And so now what you have is you have an instance where that leverage came off the system, 3 Arrows blew up, they had lenders, and now you had Genesis, which was also a counterparty here, that DCG had also poured money into to try to bring out of that hole, and now everybody is feeling the pain from that hangover.
How much surprise among the people who you speak to is that there is not more contagion, that there hasn't been greater fallout?
We're in the middle of it. The reality is neither Genesis nor BlockFi have filed for bankruptcy. We don't know who their creditors are, which means once we see more bankruptcies come to the surface here in the lending industry, and many of my sources say maybe crypto lending is over, which then you wonder where that floor is once again when you don't have leverage in the system, maybe at all, for many, many years.
So is this going to happen today? I mean, it's Thanksgiving week. Their eyes are, everybody's sliding through the week, given huge news flow. And that, are you saying today for Genesis in Connecticut?
They have said on the record that a filing is not imminent, but you have to wonder if part of the reason for that is because they keep on finding new people to reach out to. So we have reported Binance. We have said
Can they reach out to the big banks?
You can.
They
well,
can
the big,
try.
yeah, exactly. And the reality is we've heard that Apollo is one of a number of traditional financial counterparties that have fielded calls here from Genesis. So now everybody's in it. Everybody is looking at the books. Okay. Everybody is thinking about what they can get if they get involved.
I'm watching the underlying 15,700 after a difficult 24 hours. A little bit of a bounce right now in Bitcoin. I'm not going to pontificate about what I see there technically. It's completely inappropriate. Shonali Bassick, thank you so much. Congratulations on a story that was at the top of the pile for Global Wall Street this morning on Genesis, and Phil Collins is not involved.
I know what you're watching. You're not watching Bitcoin.
Hey,
you're watching Argentina versus
Shonali
Saudi Arabia.
came out and whispered to me, "OMG, Argentina's behind."
This is not what he's watching.
2-1.
Yeah,
and here it is, folks. Thank you, Fox. And we appreciate that. Simone Foxman giving me the inside story from Doha. Saudi Arabia is beating Argentina with 30 minutes to go.
Thank you, Tom.
I think, where the hell is Farrell? Shonali, where's John?
Actually, this is interesting because Saudi Arabia is way behind Argentina, and Argentina is the favorite. You've got Lionel Messi, who's going to try to come and claim his victory in his last World Cup.
Would you like to comment on this?
I'm not watching soccer today.
Yeah, I know, but he's going to mock me all day. He's going to try to make me, and he's going to be like, oh, she knows nothing.
Down
He's
in
right.
flames, Team World Cup coverage from Bloomberg Surveillance. Good morning.
If you do any kind of business in this country, there's a pretty good chance that you're going to see that business registered in Delaware. Why? Because that's where you do it. And our point was Wyoming can be that venue for blockchain enterprise, for crypto.
It's not the Wyoming way to sit around and wait for change. We want that independence, we want that freedom, we want that individuality. And that's a common theme that brings together bipartisan support for this in Wyoming.
We want to make sure that people understand, especially in Wyoming, but as the United States as a whole, this trend is coming. It's not going to stop. This is more of a small town that's growing into what I would call the cryptocurrency version of Silicon Valley.
It's the philosophy of that rugged individualism, the independence, and the ability to really get things done for yourself and control your own destiny. You get that from a blockchain, and you don't get that without it.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Markets count down in Europe from the financial centers of the world. Bloomberg Markets European Close with Guy Johnson in London and Alex Steele in New York. Real-time numbers, real-time analysis. Weekdays.
Bloomberg surveillance, we say good morning to you with futures. A little bit of a lift here, fractional lift with fractional move in the VIX. The VIX 22.50 in from that 24 level. I guess that's a better tone to a market churning here, waiting for the economic data. What do we see? 78 statistics tomorrow, Lisa?
We see a lot of news. Yeah, exactly.
Something like 8:30.
In particular with Fed meeting minutes, which you've gotten some more that you can skim tomorrow. But I am curious how we get a sort of shaped narrative around how much inflation is starting to cool out a little bit.
I noticed oil with an elevation the last 10 minutes. Ukraine with an argument here with Gazprom over natural gas flow, and we'll have to continue to watch that. West Texas, $81 up from a 78 level, and Brent crude at 88.63 drifts back towards a $90 level. We keep score at Bloomberg about who gets it right, who gets it wrong. We really pay attention to who gets it wrong and ask why. Always informative for Global Wall Street. We particularly pay attention to people that absolutely nailed it. OECD in Paris, compending that large group of countries that they study and study and study, have nailed the global slowdown, the vector of it, the slowdown that we see, and they further drive that to a 2.2% statistic for real global growth next year. Alvaro Pereira joins us now, acting chief economist at the OECD, and of course with his Portuguese economics. And I'd also point out, Alvaro, your British Columbia cred, which tells me that it's all econometrics. How good are you now at OECD of guessing the statistic? Do you have a lot of confidence and degrees of freedom in trying to guesstimate out to 2024?
Well, Tom, it's a very challenging environment, but we have very confident about our forecast. We've been, as you said, we warned about the slowdown, and right now we're saying that listen, we are facing the largest energy crisis since the 1970s, and we have a dramatic picture that shows exactly that governments around the OECD are spending around 18% of GDP just in energy. And this is as much as we did in the 70s and 80s. And so a very challenging environment, so we feel very comfortable about our forecast.
With your GDP growth slowdown from whatever it was in 2021 down to 3 point whatever, down to 2.2, how does China play into that vector?
Well, for China, we are remember, this year was the lowest growth for China since the 1970s, with the exception of the height of the pandemic. And we are forecasting China next year to rebound to about 4.6%, but going down to 4.1% to 24. But there are two risks that we think that can plague this central scenario. First of all, it's fairly possible that if the strict COVID lockdowns continue and they become more pervasive, then certainly growth is going to be a lot less than we are forecasting. And the second one has to do with the real estate market. If the adjustment on the real estate market is less smooth than we would like it to be, it's very possible that also growth will be negatively affected in China. So we are seeing a bit of a rebound in China, but risks are certainly fairly high over there too.
Alvaro, you pointed out that this is really an energy crisis, which isn't necessarily the way that everybody else would frame it. They would view it as a pandemic crisis. They would view it as a free money for decades kind of crisis that have come to a head. They would view it as an inflation crisis more broadly. Why do you view it through the lens of energy primarily?
Well, first of all, the energy crisis is a direct consequence of Russia's aggression on Ukraine, right? And so, which has led to lower growth and more prices rising everywhere. We see that even before the war, prices were starting to go up, so you're absolutely right about that. But clearly, inflation became a lot more pervasive, more entrenched, and also the pressures have intensified after the war. We have, I think, a very interesting estimation in our forecast, which is trying to see whether this is mostly because of supply shock or it's mostly a demand shock. Well, if it started as a supply shock right now in many countries of the OECD, you can see that it really right now it doesn't matter. It's demand and supply. In fact, in some countries like the UK, demand factors are now having more an impact than the supply factors. So right now what we're talking about, very large inflation in many parts of the world. Monetary policy has to continue to be decisive. It has to do what monetary policy has to do in order to get out of this situation. And I think we're starting to see some positive signs in some parts of the world.
So, Alvaro, you say that you think that probably China's economy will recover next year, which might actually increase demand for certain goods, including energy. How will this factor into how much developed markets have to be hiking rates, have to be countering that increase in demand, the increase in momentum that we see heading over from the east?
Well, what we highlight as well is that this inflation is having a tremendous impact on people's incomes, right? If all across the world, we have a dramatic picture on real wages, and all across the world, real wages are going down. And that's why we focus so much that right now, if you want to ease the pain, if you want the pain to be as short as possible, it is absolutely essential that we continue to be determined in this fight against inflation. If the economy starts recovering, as we expect in the second half of next year, then certainly this will give a bit more pressures on prices. But I think as long as monetary policy is doing what it's doing and remains steadily fast on fighting inflation, we'll be able to have lower inflation going forward.
Alvaro, when Bloomberg Surveillance visits you at Central Portugal for the ECB confab here next year, you're modeling out 6% global inflation. Every single central banker is going to say that's unacceptable. Do you perceive that as a stopping point, or do you have a different statistic where we get to a vaunted 2% Taylor perfection? What do we do when we get inflation down to 6.8 or dare I say 5%?
I think what matters right now is when we're going to have inflation peaking and coming down steadily. And so the trend is going to be very important. I'll give a good example. Brazil, when they started, they were one of the first countries to face significant inflationary pressures, and their central bank decided to hike interest rates very decisively for a few months, and now it's starting to pay off. I think the last reading we had also from the United States is positive. And so what we need to do around the world is exactly to assess the situation. Some countries have acted a lot more than others. But what matters right now is to get to a situation in which inflation peaks and starts to come down durably. It has to be durably. It cannot be only one data point. And this is what we need to monitor. In our forecast, we forecast that basically inflation will start to pivot